Okay, go for it.
Okay, so my question is, I have got few calls of Tesla today for, uh, if I'm not wrong, it was 1218 expiration, and when I got it, the price was around, I think it was 620 or something, but it started to went down and it went up to 604, and obviously the price, the price I got it for was way higher that time, but the price went up again, but the strike I bought it for, it didn't even cover the half of it. Why is that? Because it crossed the price, the price I bought it, but the my contract price was like half of it still.
Okay, so you got the 18th. What was the strike?
Yeah,
620.
yeah. Let me open the app. No, not the strike. The strike was in the 620. The price was the 620 when I bought that strike. So I bought the strike for. Let me see real quick. Which one was it? So I sold few of them, but I hold two of them with a strike of 1100 and the strike of. Give me 1 second. Here you go. So the strike of 1100 and the strike of 1175. Oh, sorry, 1075. So 1075.
So what time did you buy and what time did you sell? Or what time did you buy and then what time did it cross back over 620?
I bought it like around 11 or 12 something. I don't really remember. I was at work that time. So I bought it I think it was 11 o'clock, and I bought it for, I think it was $1 something. It was like $100 for it. And then the price went up after that. It went up to like 624, 625 something, but my strike was still, right now it's 40 cents when it should be the same, right? The current price.
I think State of Decay had something to do with that since it's so close to expiration. Um,
But like the expiration is next week,
yeah,
but
but
still it's,
State of Decay is $23.
yeah.
So
Okay, I just looked it up. So when I bought it, the price was 614, and I bought it for $1. And right now the price was, before market closed, the price was around 620, and it was 40 cents only. It's like I was 60 cents down, and the price was way higher than I bought it for.
for the 1100 strike,
Yeah.
I'm showing it as $61.
One
What broker are you using?
Robinhood. I'm
Hmm.
I'm in between right now. Yeah, I can't. I'm already getting the Thinkorswim, but I'm still stuck in this for now.
Well, Thinkorswim's showing us $61 on the 1100 strike.
Okay. Yeah. So yeah, the strike. I'm talking. I think I sold the 1100 strike. So the strike I have right now is 1160 and 1150. So the strike 1100 one I sold it, and I sold it the 1075 one also I sold it. So I kept two strikes, 1160 and 1150. Sorry about that.
So 1150 is $40, yep, and 1160 is 38.
Yeah. So 1151 I bought it for $1, and 1160 I bought it for. Let me check how much I bought it for 1150. Here. So the 1150 I bought it for 90 cents.
So my only guess here is, let me just take another look.
What I was thinking was, like, bid and ask thing maybe, because like people
Nah,
doesn't
bid
pay
and
that much.
ask is really the spread for the bid and ask is really tight. The only thing that I can think of is implied volatility might have changed. It might
Okay.
have went down maybe. I don't do you remember what it was when you bought it?
No, I don't check that. Like, I was at work, so I saw it. I thought it's just gonna go up continuously, like. This happens with Tesla all the time. Goes all the way up or go all the way down.
Yeah, the
Yeah.
implied volatility, you need to pay attention to that
Yeah.
because the problem is if IV falls at all, just
Mm-hmm.
a point or two or five, that could very
Okay.
well have split your contract in half.
Okay. So when I check the implied volatility, so how should I check it? Like, how should I know? Okay, this is a good strike to buy it, or this is a not good strike to like not like How should I check it? What percentage it has to be on?
Well, you just got to pay attention to what it says when you buy it because if later in the day, exactly what you're talking about happens and it goes above the price that you initially bought it, uh, entered it at, then and your contract value still doesn't go as high as what you paid, there's a very high likelihood the implied volatility changed and it didn't go in your favor, right? There's also the uh, issue of theta, right? So by the end
Mm-hmm.
of the day, um, at the end of the day, theta is going to take off part of that contract.
Okay, so I checked the implied volatility. It's on 164 when it closed, like 164.40%. So it
Oh,
must have been really high.
that dropped a lot then, because
Yeah.
it's let's see, let me check that. You said 1150, right? Yeah, it dropped
Yeah.
10. It dropped
Like
10%.
10%.
So that explains why the contract value is what is doing what it's doing.
So do you think it's gonna go up tomorrow, or should I just go ahead and sell it and done with it?
I don't know.
No.
I would like it to go up because I've got shares, but I really couldn't tell you. I mean,
Okay, so I looked up. It says I'm right now minus 60.40% down today at 1150, and minus 58.70% down today at 1160. So I'm guessing this is from where it's open to now, I guess, because I bought it around 11 o'clock this morning.
um, okay. So what? I'm sorry. What was your question?
Like, do you think it's gonna go up tomorrow or no? Because my question was like I didn't understand, like the when the I bought it, the price was around 614, 615, and now it's 625. So the price I bought it should be high, right? So I can just close it. That's what I was thinking, why it's not high.
Well, again, it's not high because of implied volatility. I mean, you lost 10% IV since you bought it, right? If you bought it at 164, it's at 154. That's 10%.
Yeah.
So that's your reason why it's cheaper. It's less, and then add in theta, right? So at the end of the day, theta takes off.
Oh, okay.
So
So
you've
what should
got
I do
theta
next for a
having
buy?
been removed off of your contract. So you got basically $17 removed off of your contract plus 10% implied volatility as removed from your contract. So you should be if IV and theta hadn't moved, you would be in profit right now potentially.
Yeah. So what
So
should I look for the next time before I buy it? Like
well,
like you
I think you should stop trading on Robinhood. That's the first thing.
okay.
Don't do any more trading on Robinhood because you can't you like look at my chart on the top left. There's my implied volatility and IV percentile.
Yeah, I think I can't see the chat, is too many people are streaming.
Oh,
Yeah, somebody have to do a live chat.
hmm. Can someone please stream my stream? Whoever's watching me. But anyhow, you need to have the ability. to look at implied volatility before you get into a position.
Okay.
If you're getting into a position you don't know what IV is,
So how can I learn to see the implied like volatility? Like there is some kind of videos for it or classes for it?
it's simple. Low IV, you get in with you buy options with low IV. Very
Okay.
high IV, you sell options.
Okay. Oh, that makes sense.
Because now think about premium. The premium for the contract with low IV is cheap. The premium with high IV is expensive.
Okay.
It's very,
I
very
first
important
thing I'm gonna
that
do
you
is
know.
just yeah, I think the first thing I'm gonna do is just get off from this app because it's really, really complicated, the Robinhood. Like I use Webull also. On Webull I can understand pretty much what's going on, but on Robinhood it's really hard for me to understand what's going on because I have to look like two, three different places to see what's going on.
Yeah, that's
Mm-hmm.
why I recommend against it, and that's why I made that video about it because my video specifically explains that where you can't look at everything you need to look at in one place.
Yeah, I can't because on Webull, like the option channels on the Webull is pretty much show you everything in a one row. What you need to know, the open interest or the like the volume and everything.
Yeah, it's important to know and see all that in one place.
Yeah, I'm still learning. Uh, Thank you so much for answering my questions.
You're welcome.
Alright.
Okay, who's next?
Hey, Hostile. I was looking at laser on the 1 hour chart, and I don't know if it's there, but what I saw was a falling wedge, and it's approaching light support at around that 30-32 level. What do you think about it here for shares?
What's the ticker? No, LZR.
LAZR.
L
LAZR.
LAZR. I wouldn't touch that. That'll come down some more, at least in my opinion. I mean, volume is shrinking, so that's good. Let's see. Draw Fibonacci here and see if I got a. Well, it could do another pump actually. It's at the if it reverses on this 50% retracement level, it'll definitely do a pump. I don't know if it'll
Okay.
break its high, but if you're gonna get into this at say 31, where it's at actually. Well, no, let's see. This is That says 3120. Just going closer. Okay, it's actually. Let me go closer again. Trying to get my mouse to cooperate here. Well, 3121 is going to be the 50% retracement level. You could try to play off of that. Do you know what made it pump?
It was I think it was a merger. It was a SPAC merger, but what made it drop was a Citron report early this week or late last week.
Okay, and is that how? Like, what was in that Citron report? Like, do you know what
No,
exactly?
no, I don't know exactly what was in the Citron report. I just know it was bad. Jim
They
Cramer
com-
said he sees it coming back down to 18.
So
yeah,
with
they sorry, they compared it to Palantir as a full casino. They were roasting laser.
I see. Well, you never want to trade a downtrend off of bad news, right? Um, if you want to trade shares on this, I don't know enough about it to tell you that it's safe to do. But what I will say is a very simple way to determine when to get into something like this is, so if this thing's falling and it continues to fall, for example, let's say it stops down here at $13 or something, you want to see, so let's say, for example, let me get rid of this. Let's say, for example, this right here, get some circles. This right here is the bottom, okay? What you want to see is this thing breach above this resistance, right? And you want to see it do something like this, right? When it starts to bounce back up, so basically, I'd say right about here, this point, that's where I'd get in.
Okay.
So you basically want to see it hit the bottom, breach resistance, fall and bounce off of that resistance, and then go back up again. You want to see it maintain that level and then start going back up, right? You don't want to get into it. It's like you don't want it to get rid of this. You don't want it to like do something like this, or even like go above it and then do something like that, right? Because that let me just draw this again. You don't want to be in a position where, let's say you bought it up here, or even you bought it in this circle, because if it does this and then comes back below that resistance point, there's a good chance it's going to keep falling, right? It might do something very similar to this, where it'll do like it'll touch it and then it'll start tanking, right? So you got to be very careful. Something else that would be good to pay attention to is consolidation, right? So when this stops falling and then it might start going sideways, you pay attention to the volume. You want to see something like over here, right? These sections over here where there's not a lot of volume and it's going sideways like this right here, that's what you're interested in. When you see something like that, that's when it's time to get in.
Okay.
But I'll be honest, like I don't know this stock. I would do some real research into this if you're going to do shares. I like to swing shares, so I don't want to be in something for very long, but 9 times out of 10, it requires me to be in for 3 weeks, right? It's almost guaranteed. Every position that I get into, I'll see $50, like I'll put in $1,500 to $2,000 in a position. I'll see $50 to $100 returns within a day or two, 3 days, maybe a week at most. But that's not what I'm looking for, right? I'm looking for 10%, 15%, right? 10 or 15% off of, let's say $2,000. That's $300. That's what I'm looking for, right? So you want to make sure that if you do get in and it's still falling, get in very light, right? So again, if your total position size, you want it to be $2,000 and you think it's going to keep dropping, but you think the current price level is good price, then put in 250. If it drops some more, maybe 2.5%, or let's say it drops and it hits this support level. So let's say you get in somewhere like right here. Let's say you get in somewhere here, right, and then it drops again and touches this line. Throw another 250 at it. If it drops a little bit further, throw another 250 at it. Starts coming back up, or starts, goes back up and starts going sideways. Now you can add to the position and throw another whatever was left in that total position size that you wanted to put into it. But just make sure that the company is not going to go out of business. It's not going to get crushed. Just a little bit of bad news is okay. But again, I don't know what kind of bad news this thing had. It doesn't sound very good. It sounds pretty bad. If I knew more about this company, I could probably give you more in-depth analysis on it. But that's how I would play it, right? If it's a, let's say for example here, I'll show you one that I'm in right now. So I'm in RKT. I bought it. I actually bought it here, right at $20. It dropped. I didn't buy it there. I should have. And then it went up. I should have sold it. I didn't. Right. But then it drops again. Right. And it touched to 20. I bought more. Touched 20. I bought more. Dropped just a little bit below 20 and I bought more. And now I'm completely in that position. Right. I mean, over here, I bought in and sold really quick. It was within, end of day there. I got in. End of day there. I got in. End of day, the following day, I got out and I made pretty good profit, $90. And then I like doubled my position right here when it fell because it has this cup and handle. So I doubled my position. It spiked up here. I got out again, made $90. So I made $180 within a week right there. But it hit this point again. I got in and then it fell further. And I'm like, well, I think mainly the reason I didn't add to that position is because I was pretty heavy in a lot of other positions, and then I ended up getting out of some of those positions within that week. So once I had more capital to throw at it, I did, and I put multiple buy orders at $20. As you can see here, it bounced there at 20, bounced there at 20, and then finally I entered here. And now, the other day I was up $180 when it hit right here. So um, that's kind of how I do it, right? I don't go in heavy at one point, right? I'll throw chunks at it because that way, if it does fall lower, you're safe, right? And you can throw more at it. Whereas if you throw a bunch in it, and let's say up here, and then it falls down here, you're just stuck, right? You can't average down. You can't. It's going to take longer to see your profits, and it just requires you to have to sit on that position a bit, longer than you had anticipated, right?
Yeah, I see what you're saying.
Are you able to see my screen? Are you looking at the stream?
Yeah, I can see your stream.
Okay, can you do me a favor and stream my stream?
Am I able to do that on my phone?
Probably not.
Okay.
Never
Yeah,
mind.
then I don't think I can do that then. All right, thank you though.
You're welcome. All right, who's next? I am recording this, guys, and gals. So if you aren't able to see the screen, I will upload this pretty soon, and you can, watch it again and get a visualization of what I was talking about.
I actually do have a quick question for you too.
Okay.
Are you familiar with NNDM?
I'm not.
It's Nano Dimensions. I've been looking at these guys for a while, and I just recently established a new position. I think my average cost is somewhere a little under 6, but I wanted to just kind of get your opinion on the chart.
Well, looking at it right now, the first thing I see is a Head and Shoulders. So I would get out of that.
Okay. Head and Shoulders usually in the negative there?
Head and Shoulders is a bearish signal. So I'll draw it out so you can see. Let me just go a bit closer here. You see that?
Yeah.
That's a Head and Shoulders. So typically that is a bearish signal for sure, 90% of the time. So what I
Okay.
would do if I were you is get out pre-market and take the profits that you've got right now, because I think this is going to fall.
Okay.
I
Cool.
mean, it
Thank you.
could. You're welcome. It could pump a little bit in the morning, like say, to 660 to 680, but I don't see it going any higher than that. I mean, resistance is at 686. I don't see it going any higher than that. And honestly, I see it going between that and the point that it's at, which, the point that it's at is roughly 656. So 656 minus 684. 6 minus 684. So 28 divided by 2 plus 656. 670 at best is my opinion on that.
Okay. Cool.
So I would put exit orders pre-market at 650 because it's above 650 right now. It's like I said, it's at looks like 654. Let me just go all the way in here.
Cool. Yeah, that's why I really like Webull. I made the switch from your guys' recommendations, and it's so much better than Robinhood. The only thing I don't like is the unsettled funds timeline.
Yeah, I mean that's no matter where you go. No matter what broker you use, it's gonna have that unsettled funds thing, right? So most brokers for options are 24 hours and shares are 48.
Got it. Oh, so the options money you'll get in 24 hours usually?
Yeah, options is quicker just because there's more money in it somehow for the broker, even though Webull doesn't charge you for it. They still get some kind of kickback somewhere for you doing options. I think it's from the other end, whatever exchange they're using. They might get like 10 cents or something every time one goes in and out.
Got it. Yeah, I was spoiled with Robinhood, but that's literally the only benefit that Robinhood had.
Yeah, Robinhood is terrible.
Yeah, Webull is so much better with the charts and everything.
Yeah, and once you get really good at Webull, consider going to Thinkorswim. It's even better with charts.
Awesome. Yeah, Webull's still a little hard to digest right now, but I even got that one recently suggested book, and I'm diving into that. So all good stuff. Thank you.
You're welcome.
Hey, Hostile. Have a question regarding the covered call.
Okay.
So, let's say is like I decided the strike price couple dollar more from the what the stock is currently trading, and let's say I put the expiration date after a year to get higher premium. So if it's hit in a couple days because I just did the couple dollars from right now it's trading what the current price just a dollar or couple dollar more, and if it hits in a couple days what would happen? And I have share, so I know that when it hit the strike price it sell my stocks and give me the premium plus whatever the difference I would make money. But will I get my money back right away, or it will hold the money till the expiration come, like till the next year?
So I'm not totally sure on your question, but I'm going to try and answer it. And you tell me if I answered your question. So with the covered call, you have 100 shares, you sell a contract, right? So first of all, I want to make sure you sold a contract to open, correct?
Yes.
Okay. So no matter what the expiration is on that, whatever premium you received. So the problem with covered calls is if you bought it a year out from now, it's going to take a really long time for that theta to decay, right? So you're going to need that position or that stock to fall rapidly. What's the stock, the ticker?
Neo.
Okay, so you're going to need this to fall rapidly. How much, what's your break even on the shares?
$46.70.
46.70. And what strike did you do with the covered call on?
50. I haven't done yet, but I wasn't sure, so I haven't done yet.
I see. Okay, you haven't done it yet. Okay. Never go very far out with covered calls, right? Because you're going to be,
Okay.
you're not necessarily stuck in that position, but let's say it starts ripping. Let's say Neo goes to $70, right? You can't get out of that position unless you close that covered call and sell your shares. Then you might break even if you're lucky, right? But so if you do like a covered call at $50, now next question, do you want to keep those shares?
Not really.
Okay, so sell December 18th covered call at $50. You'll get $88 in premium, and if it takes your shares, you're going to get the additional, let's see, 46. You say you got 100 shares, so 46.70, or was your break even? No, I'm sorry. What was your
For
break even for your shares?
46.70.
Okay, 46.70. So just let me do a little bit of math real quick. Let's see here. 100, 670. If it takes away your shares by December 18th, so let's assume for a second that Neo goes to $51 by December 18th, and you've got a covered call. It's going to take your shares. You're going to keep the full premium, and you're going to make $418, right? So if you sell a covered call at 50, whatever the difference is between your break even and that 50 number, which is $330, you're gonna get that plus the premium that it's going to pay you, which is $88 in this current scenario. So your total value is going to be $418 of profit. I would never go very far out with covered calls. So the question you have to ask yourself with covered calls is, do I want to keep the shares um, um, or do I not want to keep the shares? Or in my scenario, I do cash puts. So if I got to sign shares with cash puts, then I'm looking to get that premium back at the strike that I sold, so that I make something, right? And I normally, if it goes in the money for me on cash puts, I get assigned shares. Then I start selling covered calls at the same strike that I got assigned initially, right? So there's a few ways that people do covered calls, right? That's the way I do it. It sounds like you just bought shares and then you want to sell a covered call. I wouldn't go very far, right? At most, you want to go to the next month. It's January, January 15th, and a $50 strike is going to pay you $480. So
So 480 is the premium,
480 is the premium for January 15th on a
and
covered
plus
call.
whatever I have made on the shares.
Correct. So 330 plus 480. That's how much you'd make off of covered call with Neo at $50 strike for January 15th expiration.
Okay. So I kind of got the answer of my question. So I was thinking like if I do the January 21st or let's say 22nd,
Hey, sorry to interrupt, guys, but there's a lot of feedback going on.
I think it's you, whoever that was. I don't hear anything.
It's muted, so I was hearing you guys like twice.
It's probably you, Cal. I don't hear anything. Does anybody else have any problems?
I don't hear anything either.
Nope. And your video quality
Nope.
is actually improved as well.
Yes.
Yep.
Okay, beautiful.
Me too. I'm also hearing 2 times, but I can, hear clearly, so I wouldn't mind.
Okay.
It's like an echo sound.
Yeah, I don't know. I've got headphones on with a microphone on the headphones, so it's not me. um, so does that answer your question?
Yeah, hostel. Like pretty much, I got the answer. So let me clear with the last thing. Like if I do the 20-second, whatever premium, like whenever stock hit the strike price, I would get the premium plus whatever difference between the strike and my actual break even.
I'm sorry. Say that one more time. Actually had an echo there. I had to mute somebody. Say that one more time, please.
Okay, so for example, $47 is my break even price.
Okay.
I did the strike at 50 for January 22nd to get the higher premium. And in couple days, that stock hit that strike price. So I would make $3 difference between the shares plus premium right away in my account.
No, if it hits it in 3 days, you don't. Right. So you'll be down on that position in 3 days. You need theta to decay. When you sell options, theta must decay. Right? It needs to erode the value of that contract because you got to remember somebody paid you X amount of dollars for that contract. So you sold that position, right? You sold a call. Somebody paid you money for that, right? That contract price needs to decay and go down in value for you to keep that money. So let's say, for example, you got paid $500 for that $50 strike, and in 3 days, it's worth $480. You're only $20 up. Does that make sense?
Yeah,
Yeah.
now I got that. Okay.
So you have to let the time happen and erode the value of that contract before, because you have to, when you exit that position, you have to buy it back. So remember, whenever you got paid, you want to be able to pay less to get out of it. That's how you make money.
Okay. Okay, got it.
Okay.
Thank you.
You're welcome.
Sup, hostile.
Hey,
How do you feel about the Airbnb IPO? Do you feel like it's a good value, or do you feel like it's overvalued right now?
is it out yet?
Yeah, IPO today at 1 o'clock. It's at 144 right now.
It came out at 68, I think, didn't it? What's the ticker?
Oh, A, B, and B.
Holy smoke. Huh. Yeah, I think it's way overvalued. I don't even know why it's so expensive where it's at. I mean, I don't understand why. So the thing with these new IPOs, I would let that stuff play out, right? I mean, so like, let me show you Rocket, what Rocket did when it came out. This is typically what they do. They start low and they rip high, and then they fall back down, usually right where they're at. And that's exactly what Airbnb did. If I go to the 1 day here, right? I mean, it opened 144 and it came right back down to where it's at. Um, I don't know, honestly. Like, I have no idea what this is going to do, but I wouldn't touch it. It's too high, like dollar wise. To be
I got
brand new today and it's $144, I wouldn't touch that. Because what if it tanks 50% tomorrow?
got you. So like, if you considering long-term shares, you'd wait for it to settle down a little bit before getting into it.
I wouldn't do long term at all on anything brand new unless it's a really amazing company.
I got you. All right. Thank you, man. Appreciate your help.
You're welcome.
So you don't happen to find Airbnb better for long term?
It's too new for me to say that it's something worth holding long term.
So
Right.
when you say it's too new, it's because it's new to the it was just officially enlisted. So you think that's too new in order to invest in it in the long term, even though Airbnb would be considered a big company?
Well, here's the thing: is I don't know its revenues. I don't know its
So
history.
yeah, you don't know enough information.
Yeah.
Okay.
I mean, I know what the company is. I've used the Airbnb
Right.
before, but it's a matter of like numbers, right? And
Right.
I don't have any. Now, if somebody knows Airbnb in and out, they know the company, they know the CEO, they know the management, they know all that. That's a different story, right? That's fundamentals. If you know all of the fundamentals of Airbnb and you think it's a good company to invest in at its current value, then have at it. But I have no idea, so I wouldn't touch it.
Hey, Hostile.
Hey,
what do you think about General Electric? I'm pretty new to the investing thing. I literally just joined your group today. I'm still new to like pretty much everything. I invested in GE like at 10.50. Right now it's around 11.30, I believe. What do you think? Is it gonna keep going up, or what do you think?
I would get out of that. I mean, you're in at a high basically, and you're in profit, but it's at a high. I mean, this is since March, and it's that high. I would get out of that. Never invest up here. You want to buy shares down here. You know what I mean?
Yeah,
Like
yeah, I get you on that one.
it's way too high for me to say hold that thing long. And I mean, GE's been struggling for a while. So
Yeah, I've seen that for a couple years now.
yeah,
All right, sounds good. I appreciate that, man.
you're welcome.
Hey, Hostel.
Hey,
Curious if you're looking at XLE, if you see any resistance at the current price, some long-term call options.
there is resistance. It's not strong, but it's there. It's a little bit. Let's see. I mean,
Oh, so yeah, you're nice. Yeah, nice little.
you got a little bit. Question is, let's say this area is kind of resistance. Question is, let's see. The volume looks good. I mean, looks like it's got more buyers than sellers, so that's good as far as upward trajectory. And again, this point's not a strong resistance point. I'd say your next really strong resistance level is going to be around 47 to 50. I'd say closer to 49. 47 to 49 is going to be a super strong resistance for XLE.
Do you read charts differently if it's an ETF versus a traditional stock listing?
No, I look at support and resistance exactly the same way, trend direction and analysis the same way. No difference. I mean, what moves it is obviously different, right? This is the energy sector, XLE. Energy's actually been doing pretty decent lately. Let's see. Always look at Exxon and Oxy. Yeah, I mean, look at that. They're wow. Holy crap. I was in Oxy, sold it at $13. I sold right here for Oxy. Mother fudger.
I
but
called
yeah,
it out over the weekend.
what's that?
I said I called it out over the weekend. It looks good for long-term shares from here.
I had it down here. I bought it at, I had a break even at $9. I sold it at 13, and look at it. Oh man, I had $2,000 worth in it. I could have.
You can still like get in, hold it
Nah,
long term. It looks
I
really good.
I don't like it. It's too. I don't like oil. To be honest with you. Um, so back to XLE. I'd say it's going to have pretty strong resistance up here somewhere. I don't think it's going to stop moving up. It's got some strength. It's got more green than red. And it had a decent pullback here. I'd expect another pump, potentially about the same. So if you look at these recent pumps, they're all relatively the same, right? I'd expect something like maybe this right here. There's a little bit more red in there than I'd like. So maybe not quite that. Maybe, let's undo that. Maybe that. So maybe double this. Might run up to about 44 or 43 before you see some kind of red. And then, I mean, like I said, it's at weak resistance here. This is weak resistance. This is where it gets strong right here. This top one. That's where I see strong resistance.
I'd be happy as hell if it hit that number. So I have June 5th, $45 calls. So if it gets close to even 45, I'll be doing well.
Yeah, I think it's going to keep going for a little bit. I mean, we're in a bullish month. December is just bullish, and I think it's going to stay bullish all the way till January. To be honest with you. It depends, though. You know, we got this political environment still going, so you know, depends on whether or not what happens with this whole election fraud thing, right? I mean, is Trump going to be successful? I don't think he will be, but if he is, that's going to throw a huge wrench into the market. Now, it might make the market rip. Who knows what it's going to do? I just know that that's not good. That will bring about a ton of volatility. Let's say that. So there is that. But I don't think he's going to be successful with what he's trying to do, frankly.
Okay, thanks.
You're welcome.
As far as electric vehicles, what stocks do you think will do good in the future?
I don't know. I don't really follow too many other than Tesla and NIO. I mean, I think there's another one called XPEG, was it? XPG? No, XPEV.
Yeah, they were doing pretty good for a minute and they just went completely down. Yeah. They were
I mean,
up like at 70.
Yeah, this is a Chinese company, just like NIO. I mean, here's the thing. I fully expect China to get back on their high horse if Biden is president. There's just too many shady things happening with Biden in China. I don't know. I'm just a believer in the fact that we've been sold out to China for decades. You know, I believed that before Trump got into office. I've been believing that since the 2000s, the early 2000s. You know, when Bush was in there, I was believing, you know, basically when everything started becoming made in China, that's when I realized that we've been sold out to China because all the manufacturing used to be in the U.S. Right? So when a country's built, its economy is built off manufacturing, it's the powerhouse. No question about it. right? So, uh, when the United States had its renaissance back in the 1800s, it was a manufacturing powerhouse. That's what leapfrogged the United States up front to the top 3 in the world or top 5 in the world. And then we became a major superpower when we helped beat back Germany in World War II, right? And then from then on, we've been number 1, I guess you could say. And then the past 20 or 30 years, China's been really catching up. And I'd say right before Obama got in, China was already at our heels. Now they're neck and neck. So I don't know. I mean, to answer your question about EVs, I don't know. I don't follow EVs that much to really know, anyways. I only follow Tesla and NIO. So unfortunately, I couldn't name anything. But
Thank you.
expect some stuff to pop up, though. I mean, I think the competition's going to increase. So expect another Tesla out there somewhere in the next 5 years. Expect something like a new Tesla, and then it's going to get huge like Tesla. It's going to be Tesla's main rival. NIO is not going to be Tesla's rival because it's in China. It's not worried about United States. It's worried about trying to get big in China. So maybe Fisker.
What about Nikola? Is that US based?
Yeah, and it's trash.
Really?
It's
Oh
complete
shit.
trash. Yeah. It's just a fake bullshit company that talked out the side of their neck, and they haven't produced a single vehicle. They haven't even. I don't even think that. How's that company still even floating? I guess with GM's money.
Oh shit.
So
Hey, Hassel, I have a question.
okay. Was that 1 second? Was that done? Was that it? Who was it that was just asking questions?
Oh, that was me. Yeah, that was it, man. About the EVs. I
Yeah.
appreciate that.
Okay, you're welcome. All right, Pat, go ahead.
Okay, so I've been playing Space since it came out, and but I only exclusively did stocks. So I've recently been doing options, and I was kind of looking into some leaps, like July next year and stuff like that. Um, I've never really done a lot of leaps. Could you kind of explain like the benefit of a leap or the cons, pros and cons, and kind of how those are applicable, and under what circumstance you would choose a leap?
So leaps are going to give you a ton more time to show profit, but so that's a pro. Con is it costs more money. The time that I would get into a leap would be when it's down, right? When the stock is at a low. That's a good time to get into a leap. The benefit of a leap is the fact that you're not waiting for it to pump. Like, let's say, for example, space is right here, and you get into an option right there, and you're like, all right, crap, I need it to start jumping now. Well, with a leap, it's like, well, you can take a month for all I care. It's going to show profit within the next couple of months, right? I mean, there's a quarterly period here in the stock market, and the stock market moves in quarters, and it goes up, goes down, it goes sideways, right? So if you get a leap, then you buy yourself a lot of time to show profit, even if it's negative for 3 months, and you get like a 8 or 12-month leap, and it's negative for 3 to 4 months. At some point, it's going to become positive. Why would you buy leaps? Well, I guess that's really why, but did I answer all your questions? Sorry.
Yeah, I think so. I think that's pretty good. It makes sense. And the only, I guess, last one is what comprises a leap? Like how far out? 30 days, 60, 90? When does it become a leap?
I'd say at least 3 months.
Okay.
I mean, there could be other interpretations, but in my opinion, a minimum of 3 months. I like personally 6 months to 12 months to call it a leap. 3 months is still a little bit short. Me personally, if I do leaps, I would sell calls against it, which basically turns it into a calendar or a diagonal, depending upon where you positioned your strikes. And the beauty of that is that, let's say I sell a leap 12 months out, or I'm sorry, let's say I buy a leap 12 months out, I can sell contracts against it every single month. And let's say you buy let's say right now space is at $18, and you buy a leap at say 25. Okay, strike at 25, and you've got it for a month. You sell calls against it, you take in premium, and then you got second month, you sell calls against it, the same strike, which makes it a calendar, and then it goes past your strike in the second month of your 12-month leap. You're going to be negative on that sold position, which turned it into a calendar, but that bought leap is going to show a lot more premium or a lot more profit than that sold position is going to show negative. So that's why I like calendars using leaps, because if it goes past the strike that I sold, I'm going to have more money on that leap, and it's going to completely offset the loss, and I'm still going to have profits. So here, I'll show you a perfect example. I don't want to use space though. Let's see. I guess I can. So let's say January 2022. I'm gonna sell leaps at 40 or buy 40,000 bucks. And then December 18th, this month, I want to sell calls at the 40 strike. Oops. I did 2 buys. That's not going to work. All right, so let's say this month, let's say before the 8th of December, I'm sorry, 18th. So on the 18th, if it goes to that, so I basically would be buying the January 2022 and selling this month's December 18th. All right, so I'd taken $1. So I basically pay $1,000 or $1,100 for that leap, and I'd be getting paid $108 to sell a call against it at the same strike. That makes it a calendar. If it goes to the $40 strike, I'm still up $403. Even though, I mean, even if it goes to 41, I'm still up 416. Right now, let's just remove this short-term position. Right, it's a little bit more. 440, 513. You see, this is where it starts to kind of crest. Right, so if I put this back in, you see how it changes. Right, it starts cresting right here at 41.42, and then it starts going down in value. Right, so if you were doing a calendar, you'd want to sell it when it gets to 40 to 41. Somewhere right here is where you want to unload both of those contracts, and you're going to end up taking in $413. So that's the beauty here, is you can sell calendars 12 months out for your leap, and then sell front month contracts like December, and then when we go into January, you can sell January. And if it ever goes against you on that front month, you're in profit. Sell both, get out, rebuy the leap, and just keep doing that. That's a very easy way to make money, but it also puts your money on hold for a while too. So that's the other thing. And here's another caveat. There is theta decay, right? And it increases on that leap as the months go, right? So if you're selling, if I were to sell a January position on this, let's see here. Let's say the 40, yeah. So number one, I'd get 255 bucks, but if it gets to the $40 strike, and now it's a way less profit, right? So that's why I always say you sell the front month because you're going to take in a little bit less premium. You're going to still take in premium, and it should completely offset your theta. All right, so your theta for December 18th is going to be, I'm sorry, your theta for this is $2, right? So every day it's going to go $2, whereas by expiration in 8 days, you're going to have made 100. So let's just do the math real quick. 8 days times 2 is 16. If I took in 100 and let's see, 105, 108, I still make $92, right? And I just let this expire worthless, and I keep my money. Unless it goes in the money, then I'll sell both positions, right? I'll sell both positions and make $400. Does that make sense?
Yeah, so basically, that sell, if it doesn't go in the money, you just let it expire and collect the premium. And then if it does go in the money, you would just sell both and then restart it all over.
That's right.
Yeah, that's pretty awesome.
And you want to do this, the best time to do this is, number one, you have to pay attention to implied volatility. That's important, right? So you want to get it when it's relatively in the middle, right? 50% IV percentile. Right now it's 34. So I mean that's fair, I guess. Not a bad idea, but you want to make sure IV's a little bit high, or at least you can buy a LEAP 12 months out at a very low IV, so you're going to pay a low premium, and then as IV builds in the next couple of months, then you can start selling contracts against it, and you're going to take in a lot more premium because the IV is higher, right? So you theoretically, the best way to get into this is, say, at a support level, you get it with low IV. In a month or so, IV's pumped up 30 or 40%, and now you're able to sell calls against it and take in high premiums, right? And while you're taking in those high premiums, your LEAP has gained in value because of IV as well. So you double your profitability, if that makes sense.
Yeah, that's perfect.
This
Thank
just
you.
takes a long time sometimes, right? You might be sitting there for 2 or 3 months with a LEAP, and your positions, like your front month positions, might not be paying much. So make sure you get if you're gonna do this, make sure you get into something that's fairly volatile and has pump and dumps of IV, if that makes sense. Tesla is perfect. If you can do that with Tesla, get Tesla at a low, like a 60 or 180 day low, and you get IV at 65 for Tesla, which is a 10% IV percent. And then you buy LEAPs a month or a year out. It's expensive as hell, but you buy LEAPs a year out, every month you're gonna make $2,000 or $3,000. I mean, hell, look at how much Tesla cost front week tomorrow. Let's see how much Tesla costs tomorrow. I mean, at the money, 1,200, but let's look at December. So if I sold, here, matter of fact, I'll just do a scenario real quick so you can see. Let's say 700 bucks, because that seems to be a high open interest position. So buy, and then 700, $2,000. Wow. So it costs $16,375 to buy a LEAP a year out. But December 18th is going to give you $2,050.
I can get better at option trading. I can give up. I told you when I first watched it like I do like option trading.
And if it hits that $700 strike, you'd make $4,600, almost $4,700. So you'd get out of it, you make that 4,700, and you repeat that process. I think this is perfect example of extremely volatile positions. Calendars are awesome if you've got the money. It's another really amazing strategy. You know, if you got $1 million, you can do Tesla all day long. You know, but if you're, you know, $10,000 or something like that, then maybe space is where you should go, or Virgin, whatever. There's other options out there, but you get the drift, right? Makes sense?
Yeah, really great answer. Thank you.
You're welcome.
So,
Hey,
Hasta,
Hasta.
what's the
Yeah, please give me a moment. Actually, I don't have a question, but I have a request to you. One of my buddies online, his name is Devans, and I think you have muted him. So please, can you unmute him? He has some question.
Sure. Let me see where he is. Okay, he's unmuted.
Okay, so yeah, thank you. So my question was, like a couple minutes ago, you were talking about the covered calls. So my question is, could you like only trade like sell covered calls on monthly expiries, or you can also do that on weekly expiries?
You can do it in any expiration, but the further out you go in time, the more premium you'll get.
So could you do like on Monday you you sell a call for the expiry that Friday, and then you buy back the call on Thursday or Friday for like a cheaper while keeping the shares like every week.
You can, but you're not going to get a lot of premium from that sold call. Do you have something in mind specifically? I can
No,
show
I was
you.
just learning about the covered call strategy today, and this question came to my mind.
Okay. Let me see if I can find. I got to get an example, maybe. Give me something that you like to trade.
Let's say Apple.
Apple. Okay. All right. So you got So I'm assuming you got 100 shares of Apple.
Mm-hmm.
Tomorrow there's an expiration tomorrow. What's your break even? Or let's say maybe your break even on Apple is 120. Okay, so
Okay.
let's say you own 100 shares at 120. Okay, so if I were to sell something for tomorrow, I mean, look at the premiums here. $43, $18, $8, $421. Not worth it. Right? At best, the $43 at the money 124 strike is the only thing that's worth it. Right? So really short term, you're not going to get hardly anything for premium. And you're not going to gain much on, you know, if your break even is 120 and 124 is the strike that gets called away, your shares get called away, you know, you're only making $400. That's, I mean, what's the point of holding the shares, that many shares for $400? I mean, you know, you're talking 12,400. What's the point of
Mm-hmm.
holding shares for only $400 when you've got 12 grand in it, right? So December 18th, it's gonna be a little bit more. So again, let's just say around the $40 to $50 mark. You're looking at 129 to 130 strike, right? Looking a little bit better. I'd probably go
Mm-hmm.
for the 127 since there's a resistance there. And that's $85, right? So it's still not great, but it's given Apple 8 days to reach that, right? And if your intention is to keep the shares, it's a little bit dangerous, right? Because there's
Yeah.
a very high likelihood, in my opinion, that Apple's going to potentially call this away, right? And then again, if I go out to say, and you always want to go out on the monthlies, unless you're right up on top of the weekly, like a week or two out, then you could do the weeklies. But if it's 2 weeks or more, you want to go with the monthlies only. Now with Apple, it's got a ton of open interest, so it's probably okay to do weeklies throughout. But again, look at how much open interest is for January 15th. Hundreds of thousands, right? But if I go to say January 8th weekly, there's not as much. There's maybe 10,000, right? So you see the difference on weekly contracts versus monthlies. You just got a way more exponential amount of contracts on monthlies, right? So you're looking at hundreds of thousands. So again, if your strike's 120 and by January 15th, if you do the January 15th, it's still not really paying that well, right? 140 strike is $100, but then again, now you're looking at $2,000 plus $100. So you're kind of just slowly. The idea of a covered call, if you want to keep the shares, is to lower your break even. Right. So the best time to do covered calls, if you want to continue to own shares, is do them at the money when it's at a high. Does that make sense? That way you want it to fall. So you get the most premium at the money, at the high. Stock falls, very low chance of it going in the money, right? And you'll keep full premium. But if you want it to take your shares, then by all means, sell it at the money at 125. $430 is what you would get plus $500. So you're basically going to make $930 on this particular position. So I don't like covered calls. That's for me. Covered calls is risk management strategy. So it's like the second half of a strategy that I use. So I do cash puts. If I get assigned, then I do covered calls. I never do covered calls straight up.
Okay.
I don't just buy shares and then do covered calls. I don't do that because I can make more money just swinging shares at that point, right? So timing is going to be very critical if you're trying to do that. And I think it's better just to do calendars at that point. It's the same thing, except you're not owning shares. You're just flipping contracts at that point. So that's why I brought up calendars, because if you're going to do covered calls, then you might as well do calendars. Instead of buying 100 shares and being out that much money, you just buy a leap and then sell contracts against it. And if it ever goes in the money, you make double what the premium was that your sold covered call paid you, basically.
Okay. Yeah, that was a good answer, and like I understood it. And also, I have another question. What does open interest mean in an option?
Open interest is the amount of contracts that are currently open. So it could be shorted, it could be long, doesn't matter. The easiest way to understand whether or not it's lopsided is how wide is the spread. Is it a very tight spread? If it's tight, like 430, 440, I'd say that's pretty tight. Or 545, well, no, 430 and 440 is a pretty tight spread. To me, that means there's an equal amount of buyers and sellers. Oh, here's the even better one. 50 and 51. That is a super tight spread. Right? So, that's almost equal amount of, it probably is, it could actually theoretically be equal. They can never be the same. The ask has to always be higher than the bid. I've never seen it equal. So when you see something at 50 and 51 with 128,000 contracts, 120,360, that means that there's roughly 600 or 64,000 people on both sides, buyers and sellers, or long and short people on this strike. Does that make sense?
Yeah.
The volume, on the other hand, means that's how many people exited that strike today.
Okay, gotcha.
All right.
Thank you.
You're welcome.
Hey,
Uh,
Hostel.
Wuman, I think Ryan had a question first.
Oh, okay. Sorry about that. Go ahead, Ryan.
Yeah, no problem. Just going back to what you were saying about calendar spreads with Tesla. What's the risk of a long calendar spread?
If Tesla goes down badly, or if it goes sideways, I mean, well, sideways is probably okay. The only real risk is once theta has started to really decay that position, that leap position, it's going to have lost a significant amount of value, right? And at that point, it's like, well, yeah, you're doing these short-term selling positions, but at some point you need to exit that long-term position, right? So the best way to do a calendar is to get as close to at the money as possible with your leap, and then sell short-term contracts against it. So diagonals, this is the benefit with a diagonal, right? So a calendar and diagonal are the exact same thing with one exception. A diagonal, the leap is at the money or in the money, right? And then the sold position is further out of the money above that strike, right? So you're basically, I would like to get it, me personally, at the money. So let's just say for a second, we'll do Apple since I've got Apple here. Let me just clear up this. Okay, that's good. So I would like to get Apple a year from now on the 125 strike. Oh, that's actually pretty cheap. $1,790. Okay, so oops. So I'd buy Apple, and then I would sell front month contracts, let's say 18th. So I would pick somewhere like that where there's resistance, right? So I would probably go for right here, 127. Could probably even go further in. So I don't like that, actually. That's not a good diagonal.
So now what you're doing is you're protecting your leaps by selling, in this example, the 127 call.
Yeah, so this is why I don't like diagonals, because Ivy makes a bigger difference, or a bigger change, right? Let's see what Ivy is. Yeah, it's pretty low. So when I sell, if Ivy was high and I did this, there wouldn't be a dip here. It would probably just have it be something like that, right? It would just be a linear movement upward. It wouldn't be like a ridge, dip, and then go up. It would just be kind of a linear movement upwards. But basically what you'd be doing here is if you go at the money with your leap and further out of the money with the short-term position, the leap itself is going to be much higher in value, whereas the short-term position, you're still going to be able to potentially let it expire, keep the full premium, and then sell your long-term leap for a decent value as well. So, but look at the difference here when I do a calendar. So, what did I choose again? Oops. 125 strike.
And this line that you're showing me is potential profit depending on where Apple goes.
Correct.
Okay.
Yeah, see, I don't like this because IV is just, this isn't a good example. IV is pretty low. So it just gives this dip. Let me do this Let me go to Tesla. This Tesla seems to be the one that has crazy numbers. So again, this is exactly what a calendar looks like, right? And you see I got 700 and 700. Now let me move this down to, let's see what it looks like at, what's the current stock price of Tesla? It's 627. So let's go with 625. Now look at that. So that's, well, that's negative. I don't like that.
Now, how are you choosing your expiration for the short-term leaps? I'm sorry for the short-term selling to open.
I always go for the same strike. So this is why I like calendars much better, because there sometimes it does weird shit like that where it shows huge negative numbers. This is a perfect calendar. I choose the 700. So if my leap is a 700 strike, I would choose the 700 short-term contract, because basically once it crosses over that number, it starts to crest at some point, right? You want to get it, you want to sell it before it starts that downward crest. And honestly, like or no loss whatsoever, the stock would have, Tesla would have to jump to 922, and I'd still make $43. Right? So it gives you a huge amount of time and stock movement to still make a few grand, right? I mean, it's say 805, I'm still making $3,000 because of that leap. That leap's going to really pay off. Now, the one thing that's going to, again, there's a caveat, and it's implied volatility. If IV drops, that's going to negatively affect your leap.
But could that position be losing even though you're selling to open a short-term call?
No, because the short-term call is much cheaper, right? It's only $2,000 you're getting paid, whereas you bought the leap for 16,000, right? So it makes the leap worth a lot more, and if it goes in the money on your leap, it's going to pay you a hell of a lot more than it's going to take from you on that short-term sold position. I'd recommend, if you're interested in this strategy, I'd recommend virtually trading it and get something at the money or pretty close to at the money and see what it does.
Okay.
That's
And
the safest way.
you're choosing weekly expirations for the short-term selling.
It depends. So this one, let's see, was that a weekly? No, that's a month contract. So that's December 18th. So I want something that's going to shave off a decent amount from this $16,000 number. So let's say, for example, this calendar, it never hits 700. It stays under it. Let's say somewhere right here at 650, 660. I'm going to keep that 2,000, but this contract's going to decay. The 16,000 one, that's worth 16,000. So let's see how much, say, to decay that position has. $23. So in 8 days, it's going to decay $23, and it's going to probably speed up just a little. Let's just say 23, though. Should be relatively close the whole time since it's a leap. So 23 times 8, that's $184. That works to me because I'm getting paid $2,000 for 8 days, right? So this 16,375 minus 184, my contract's only worth 16,191 at that point. So it's decayed $184, but I got paid 2,000 something, right? So you get where I'm going with this is you got to make sure that they equal out in the sense that you're going to gain more on that short-term contract, versus how much you're going to lose on the leap as far as theta goes. Does that make sense?
Yeah, I see what you're saying there. So would calendar spreads be considered high or low risk spreads?
I think they're very low risk, especially if you get something at a support level, like down low, and you get it. Now with these types of positions, you want to get a strike that you think the stock's going to hit. Right. So generally, with options, buying options, you don't really look for a strike that is going to hit. You look for, open interest, how much it costs, those kinds of things, bid-ask spread. But with a leap, you're looking for a price it's going to hit, because at that point, when it hits it, it's going to be worth money, right? So let me find a different one. Let me find something that's at a low.
Sorry, Hostel. Maybe you can check for like a trade desk. Like I think I was the one asking you this question in the chat actually. Like I found like great numbers on trade desk as well. The same strategy you're explaining right now.
What's the ticker?
TTD. T is in Tom.
Ooh.
Yeah.
I want to find something at a low. So
Oh, okay.
let's
Sorry.
go with pets. Pets is kind of at a low.
Yeah.
So I would say I want to get like a 32 strike right here. So let's see how much I can get pets for a 32 strike. So I can't get a 32 for pets. I have to go for a 35, which is right there. So I think could hit. So 35, and then short term, December 18th. I need to go a little bit further out because the value is just not there. Still not. See that this is the kicker, is you got to find something with crazy IV. Right, here's 35. So I mean that's a quarter of the contract, but it's in March. So that's just not a good choice. I need something where I can sell multiple times in front and make decent profits to outpace the theta. And at some point, I would hope that it reaches that strike that I bought the leap on. Then my leap's going to be worth big money.
Yeah,
Does that make sense?
Yeah, I understand what you're saying.
Okay. Unfortunately, I can't find anything at the moment that's a good example. Maybe Netflix. Let's see. Netflix, I could say 525. Let's try Netflix. So January 525. Let's go with the 520. So you got to do some kind of analysis on the chains here to see if it's even worth. So 525. Yeah, this one's pretty decent. 335. I can get off of that one. See how that diagonal looks? That looks pretty. That's exactly what you're looking for. Something that does that triangle, right? And if it hits the number I'm looking for, I chose a 520. Let me see what the 520 looks like. That even better. See how it actually went up? That's awesome.
Yeah.
So if it hits the 520, I'm looking at $1,000 in profit by the expiration, right? So if it expires out of the money, which means below that price, I'm making 425. Theta decay on that long-term position costs $11. 11 times 8, that's 88 off the top of my head, right? So 88 minus 425, that's my 25 minus 88, $337 in profit.
And that's if Netflix goes down.
That's if Netflix doesn't cross 520. Hell, that's if Netflix Um, 25. That's if Netflix doesn't go above 502. If it goes to 510, I can still sell both contracts and make $798, assuming IV doesn't change. Does that
Okay.
make sense?
Yeah, a little bit. I've never sold options before, so I'm still new to this, but I'm looking to get into it.
Option selling is one of the, a lot of people don't realize option selling is actually less risky as long as you're doing a covered position. Like spreads, there's multiple types of spreads. You can do iron condors, credit spreads, iron butterflies, calendars, diagonals. They all have some type of covered position. And what makes it covered is this, right? If it goes in the money on one, it's actually in the money on both. But the red, which is the sold position, it's not good for you, whereas the green it is. And if you're getting leaps far out and it goes in the money on both of the same strikes, you're going to be making a lot more money than you're going to lose off of that sold position, because that sold position's much more short term. It just costs a lot of money, right? It costs a lot of money to do this type of strategy, almost $8,000. But the beauty is, as soon as this month contract, December 8th month contract is up, or 18th, you could probably go 2 more weeks out to the 31st. And I'm sure that open interest, you don't even care about open interest when you're selling. You don't want to buy it back. You want it to expire worthless. Right? So at 520, I'm looking at $900. So in 8 days, subtract $36 from 900. So let's see, 36 times 8 minus 900. You're looking at $612 of premium, assuming IV stays the same. So you could, as soon as this contract, excuse me, as soon as this December 18th position, let's say it expires worthless, you keep 425. You could turn around and sell another contract 2 weeks out and potentially get $500 to $600 on top, right? I mean, this contract right here is 8 days out and it's $425. So 8 days, yeah, 8 days out is $425. So imagine if it's 2 weeks out, it's going to be, maybe add another 30% to that number, which would equal around $600, right? So there's particular stocks out there that this works very well for. Netflix, I think, is one. Tesla's one. You want to get the ones that are, I think Amazon would be really crazy. Let's see. Amazon would be insane, I'm sure. But imagine how much money you've got to have buy a year out on that. Oh my God. $45,000.
Yeah, that's crazy.
But I mean, you could go for the 32 strike if you got the money, man. I'm telling you, this is where the money's at. So you pay 42,000 for this position, and just watch and see how much this is going to pay you, right? Let me go to tomorrow. Let's see what it does tomorrow. So 3,200 strike. It's still going to
Hostile,
pay
you got
100.
42K I can borrow?
What's that?
You got 42K I can borrow?
No, sorry. But tomorrow you could guarantee this thing's not going to hit 3,200. But let's just say you sell this 3,200 strike tomorrow, and it expires worthless, or it goes into money, right? So you'd sell it for $105, right? Now let's go to tomorrow, the 11th. If it goes to 3,200, you're making $3,500, right? If it doesn't hit that number, 3,200, you're going to keep the 105. All right, now let's go 1 week further out, 18th. Now it's paying you 2,200 for a week out, and let's go to the expiration of the 18th. If it hits 3,200, you're making almost $5,000. Right now, granted, 42,000 to make $5,000. I mean, not bad. I'll be honest with you. What's the percent off of that? 42,000, 5,000, about 42,000. That's 12%
Like
return.
8%.
12%.
Yeah, it's pretty
11.9.
good.
And I always say, hell, if you can do 5% a month, you're killing it.
Now, do you personally do calendar spreads?
Not at the moment. I don't have enough capital.
Okay.
I will as soon as my capital grows for my margin account. I think you need a margin account as well for calendars.
So I wouldn't be able to do this on a cash account.
No, I don't think so. But
Okay.
build up your cash account, turn it into a margin, and you can do this all day long as you got the money, right?
You're able to do that? Turn a cash account into a margin account?
Yeah, you can. Well, if you're on TD Thinkorswim, you just call them and say, hey, I want to change my cash account to a margin. Actually, you just go on the website and apply for it. And since I've already had a margin account, so I turned mine into a cash account to do some scalping, day scalps. And it turns out I'm not really interested in it after I did it. So I reapplied and it was available to me before market open the next day because I already had a margin account prior to. So they didn't have to do any applications or questionnaires or anything like that for me. But for someone that's never had a margin, it might take a couple of days, 2 or 3 days maybe.
Okay. All right.
If you don't have 25K, you can just make one of each. That's what I did. Especially at TD, it's super easy.
Yeah.
Now, let's say you have I have a smaller account on Webull. That's like $1,000 account. I'm unable to get approved for option selling. Is that because I need a margin account?
I think that is because you probably don't qualify for experience, maybe.
Even though I'm answering like all the questions the way they're supposed to be answered.
So when they ask you how long you've been trading, what's your answer?
I say excellent, 5+ years. Like I answer all the questions the way they're supposed to be answered, but I don't think I'm getting approved because I don't have enough capital in that account.
That was my next guess. Is if you've only got $1,000, they're gonna be like, well, we're not gonna give you a margin account if all you got is 1,000. Their margin is for people that have, I think a minimum 5 to 10 grand. Then they're like, all right, we'll give you margin, and because you're basically gonna go in debt with them if you. So like Thinkorswim, I think it's 1.5 the amount they give you. I can't remember the exact number, but let's say you put in 5 grand, I think they'll give you, is it 15,000 total in your account? So 10 grand to trade in margin with, or maybe it's something like that. They give you extra money that you can go in debt with, and you're going to pay interest on it. That's what they're trying to do, is get you to go in debt with it, pay interest on it, so that you can, so they can make money off you using their cash, right? I don't use margin cash. I just use my own money, even though I've got a margin account. I'm not interested in going into Thinkorswim debt.
Yeah, that makes sense.
Hey, just real quick, the SEC minimum for margin is 2,000.
Okay. All right. Yeah, that's probably why. All right. Thanks a lot for the explanation on calendar spreads, Hassel.
You're welcome.
And I also want to ask, like, as we were talking about the IV on the contract, so like, what are some factors that IV got decreased?
Less buyers, more sellers. That's usually the main factor. I'm not totally sure on everything that goes into it, but I do know that the seesaw has changed. It went from a bunch of buyers and a bunch of liquidity to people becoming shorters, which are option sellers, and people selling their positions from being buyers. So they're a buyer, they sell their position, then the shorters come in and they start shorting positions, so it lowers the price, or it lowers the implied volatility and the price typically. But Hard to say, right? There's other scenarios out there, and it's really hard to say what really makes it move. But I know that does.
Can
I'm not
I
sure
answer
what
that
else does.
hostile?
Yeah, because one time what happened to me, like I bought one contract for like $300, and I even saw that the IV was around 60% or 70%, and after one day the IV got increased about like 10%, but my contract worthing around $50. So why was that? Maybe because of the volume, and I can see that the volume was pretty stagnant that time.
Yeah, liquidity makes a big difference. Also, can be the bid ask. You might be on the wrong side of that spread, right? So if the spread starts separating increasingly, and you're on the wrong side of that spread, then that can happen. So that basically means like more sellers than new buyers, right? So it what's the word I'm looking for? It skews it. It skews it into one direction, thus making one contract really expensive and the other one really cheap.
Hmm. Yeah, that makes sense.
Sure, Cal, you can answer that question.
Basically, if the to be simple, if the uncertainty increases, IV is going to decrease. Sorry, if the uncertainty decreases, like let's say there's an earnings coming, or there's some news coming, or there's a lot of demand going for the stock, that uncertainty increases. I could pop or drop at any second. In those cases, IV increases. And when the uncertainty decreases and certainty increases, like the earnings are out, or news that everyone's waiting for is out, or like some news that people are anticipating could come out any second is out, where stock is just going to follow fundamentals instead of be anticipating for any news from the company. In cases like these, uncertainty decreases. In that cases, IV also decreases. This is a simple answer.
Yeah, that makes sense. That sounds good. Yeah, even actually today in AMD call was the same thing. Like I bought it yesterday for 135 to 155, their range, and suddenly implied volatility increased, and the now the AMD worth around $120 or $110.
I mean, a lot of like a lot of IV increased for a lot of stocks with the vaccine is coming around. So people
Hmm.
just weren't sure what was going to happen, like what kind of vaccine news was going to come out. You saw how bad the market was yesterday. Market was just really confused, with all the crash, with all the bleeding yesterday. With that, IV ended up popping. You can see PFE. PFE has an IV rank of at 62% last I checked. 65. That's pretty high. So it could. That's why I recommended people not to play PFE for vaccine news. It's basically like playing earnings at this point. You're gonna have an IV burn once the complete PFE news is out, which will cause an IV burn. You don't want to play high IV stocks like that. There are better ways to play vaccine news, like playing some leaps on travel or like long calls on travel. Those will pay because those don't have as much as the IV as PFE.
Hmm. Yeah, that's right. Thank you for the clarification, Cal and Hostel.
You're welcome. Okay, there was somebody else that had questions.
Yeah,
Go ahead.
Hostel, I got a quick question. Um, so I've been moving more out of like day trades and scalps into swing trading recently, and one of the things that I'm still learning is like when to enter into a position. And the thing is, I don't have enough capital to swing trade with shares, so I've been just using like one option to kind of represent 100 shares of the stock. And then I'm just confused if I'm about to enter a position, should I take a call that's maybe 2 weeks out, or what's going to tell me the difference to take a call that's like 3 weeks out?
Well, think of it this way. The further out you go, the more time you give yourself to be profitable. The shorter time frame you go, the higher risk it becomes, right? The other thing you need to ask yourself is, do you have an expectation of a time frame, right? And if you do, let's say your time frame is 14 days, give yourself double that. I always tell people if you're going to swing something, give yourself double the amount of time you're looking to get it for that position to start showing profit. But if all else fails and you can't really answer that question, or you're not really sure, go out as far as you can afford for that position. But remember, you don't want to turn your account into 30 or 40% of your account into one position. But if you don't have capital to play it safely and strategically, then you should consider doing something else in the short term to build capital before you start doing things like that. And when I say build capital, I say swing shares, right? Even if you don't have that much money to swing shares, because I heard you say that, I think it's more beneficial for you to swing shares because you're not going to lose it. Because if you don't give yourself enough time, you give yourself 2 or 3 weeks to swing something, and it just never happens, you're screwed. There goes that money that you could have put in shares,
Mhm.
and you could have sat on that for 3 to 6 weeks and made profit on it at some point, right?
Yeah. Actually, can you take a look at one of the stocks I've been looking at? It's Visa, and I watching today's price action. I was thinking to myself that I'm about to enter in, because I see on the 1 hour chart it made it touched the resistance, or I'm in a support 3 times. So I'm expecting it, yeah, right there to go up. And I was thinking to do a short term swing, maybe or 2 or 3 weeks out to catch it when it goes back up.
I mean, you could. It looks like it typically, in this time frame at least, let me go 1, 2, 3, 4, 5, 6, 7, 8, 20, 1, 2, 3, 23 days. So in 23 days, looks like it goes from top to bottom. 1, 2, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 1, 2, 1, 2, 1, 2. Average of 2 to 3 days of swinging back and forth between that number.
So you think it'd be safe if I grab a call option for the 18th then? That would be plenty of
Well,
time, right?
let's just assume, let's be conservative with the number. I said 1, 2, 3, 1, 2, 3, 2, 3. Let's say 4 days, right? We're about to head
Okay.
into the weekend, number one. So that automatically takes 2 days off the expiration, which leaves 6. I'm sorry, 5, because tomorrow as well. So let's assume that tomorrow. Here's the other thing: you never want to really get into a position on a Friday because you got 2 days of theta decay over the weekend, and that's just not good for anybody, especially if it's a contract that expires next week. I would say 2 weeks out. Give yourself additional buffer, right? And you can even go a little bit further out of the money if you have to. I mean, Visa, let's see. How much money are you talking about?
Well, my account's pretty small. It's like 3K, and I was thinking it'd go up to like 212 within next week.
So, let's do some math here. You said 3,000. $150 is 5% of your account. So you could do the 215 strike on this weekly, this December 24th. The 215 is probably as good as you want to get. You can even go 3 weeks out. 215. This is where I would go if I were you. Give yourself additional time. So you get 14 days. That should be plenty of time to see a swing. Now, here's the other problem though. What happens if this breaks below or above one of these points? Right? I mean,
Well, I thought the support was pretty strong there. So
here's the problem though. This is a short-term time frame. Right? Look at the long term. Let's go 90 days out, or let's go 60. Look at that.
Okay.
You tell me what I'm seeing here is way more resistance at the top and just some short-term support. Right? There is no long-term support as down here at 199 in my opinion. That's a bit stronger level to me. Does it make sense? Like right here, I'd say is a better support level. That's what I would trade off of. But I'm different. I don't like buying options, so maybe I'm not the right person to ask. But I mean, you're looking at the right thing, but time frame. I mean, again, this is a consolidation. Consolidation typically means it's going to break below one of these points at some near-term time frame, in my opinion. It's not going to keep doing this, right? It's not going to keep bouncing off these 2 points for the next 2 to 3 weeks. It's just not. Right. So at some point, it's going to break above this one or break below this one. What happens if you get into this position right here? Let's say you buy an option, call, and you're expecting to go up. You get the 215 strike or 212, whatever. But instead, it doesn't go up. It breaks through this support level. Now you're in a bad position. Right. So.
Okay, so you're saying that like what I'm basing off my support is too short term, and it wouldn't be as safe if I looked at a larger time frame.
Yes. Now, what you could do,
Okay,
if you did buy this position and you were going for calls and you're trying to be bullish, you could go ahead and mentally have a stop loss in your head that says when the price gets down here, let's say 203, get out of the position no matter what. Right? Because you got a support level here. You got this support. If it breaks below that support, that means the next level is going to be here at 200. So that's almost guaranteed your contract's going to be worth nothing at that point. Unless implied volatility builds, which it could because it's pretty low. But Visa doesn't really have a lot of implied volatility usually. So
okay.
Keep that in mind if you're going to get into this position. And I think it's if this was like a 180-day chart and we're looking at this movement in 180 days and we're right here, I'd say oh yeah, that's beautiful. But this is 20 days, I think. Just a little more than 20. Yeah, like 21, 22 days you're looking at right here. To me, that's not, I don't like that. That makes me nervous. I wouldn't do it. All right, but you and I are two different people, so you decide what's better for your risk management.
All right, so let's say come tomorrow it drops down below the support, then I'll know for certain that the short-term support and resistance levels just weren't that strong, and then I wouldn't make the trade. But if it starts like inching closer to the resistance, um, what would you say that means?
I would rather, I don't know, man. Like, so again, I'm thinking about December is a bullish month, right? To me, resistance is strong. You know, it hit its high here and it's pushed off of it multiple times, but we're in a bullish month. So if it was like January, first week of January, and it's bouncing off this resistance level, I'd be doing puts off that, right? But here's the
Mm-hmm.
other bad side to it is it's at a high, right? Yes, it's in a bullish month, but it's at a high. So that makes me not want to play something. I don't like playing things at highs and then being bullish on it. Right? I like to be
Mm-hmm.
bearish on highs. So that's not to say that it won't break through this resistance level. It could. I have no idea. I mean, it literally could go either way. You've got it bouncing off what 1, 2, 3, 4, 5, 6, 7 times there. 1, 2, 3, 4, 5, 6, maybe 7 times off the bottom. So it's almost equal on both ends of this support and resistance. So now, had it been like, you know, 5 on the bottom and 2 on the top, and it's approaching resistance again, you know, I'd be more inclined to say this is more bullish than bearish. But this one, it's like 6 to 6 or 7 to 7. It's at a high, but it's in a bullish month. So there's a lot of conflicting information on this, if that makes sense. Like to me, it's like there's no clear answer here. If we're in a bearish month, I'd say, yeah, do puts at resistance. If we're at somewhat of a low and it's at support, then I'd say, yeah, go for calls, right? But this one's kind of like right smack in the middle. You got resistance at a high, but it's in a bullish month. You got support at a bunch of support levels, but you got strong resistance. I mean, like it's a tough one. This is a tough one to say to do. You know, what's a great call? It's just too many things for me that don't check out.
The main takeaway I got is to just look at a larger time frame. And what time frame do you usually look at in order to like decide like a possible swing trade?
Again, I don't buy options. I buy shares. As far as being bullish, if that makes sense. I'll do 90 day 2-hour candles or 180 day 4-hour candles. 60, 30 and 60, I'll start there, but I'll always go further out just to see where all the strong support is, you know, where the highs and lows are in that time frame. This chart you're looking at is a 90 day 2-hour. This one gives you a lot of data, right? There's data here, right? Here's other things. You got a double top right here.
Yeah.
Let me just remove all these drawings real quick. You got a double top and it coincides with this high. That tells me that's super strong. Right? And it's kind of having a hard time getting above, you know, right here, frankly.
Yeah.
You know, so to me, like, I am bullish in December, but I look at this and I say, makes me feel bearish.
Yeah. That's probably something we'll have to break like next year, right?
It could. I mean, it might keep trying to test it and maybe branch over it a little bit and then start to be a little bit more volatile as you get into January, and then it'll start potentially going down. You know, this is why I look further out. You know, you've got support levels right here, support level right here, and then a huge one down here. This is a triple bottom, basically, right there. That one's huge support. So, you know, I'm not a short-term swinger, right? I mean, 3 weeks minimum for my shares. Like I look for 10 to 15% return, and I'll get 1 or 2% within the first week. But if I get out too soon, it's possible that I'm going to miss out on 10 or 15%. So I mean, honestly, a lot of times, a lot of the stocks that I pick for shares, it ends up being 45 to 60% returns. Like here's one that I chose over the summertime. I chose this over the summer. Down here, literally right here. Boom. $29 is what I picked.
Yeah, that looks like a strong
I mean,
support.
that's 100% return. Almost. 29 times 2 is almost $60. So it's really close to 100% return. Had I held that for, let's see, I bought it, I think it was in here. No, it was, yeah, I think it was right before August. So like late July, I bought it. And I got it for $29. I ended up selling it somewhere right here where it pumped. It did its first pump, big pump, and I'm like, ooh, all right, I'm out. I'm gonna take my profits. I got my 10%, and then it just ripped after
Yeah.
that. I'm like, had I held it for 2
Sheesh.
or so more months, I'd be killing it. Like, here's another one, mRNA. I bought this thing. I was break even at $68, right? I mean, I bought it high too. I bought it at 74, and then I bought it somewhere in here at $74, right? I think it was right here where this support level is, and it fell. So I kept buying it. It came down here. I bought some more, and then I held on to it. When they hit 87, right here, I sold it right there. I got the return I was looking for. See, actually, I think I got more than what I was looking for. I had 1,500.
So you timed that over like the span of like 2 months then?
Yeah, I mean, a minimum of 3 weeks. It can go to 2 or so months. Usually is about the average. Month and a half, 2 months for my shares. But I'm putting $2,000, $3,000 into a position, right? So for me, I always say 2.5%, 5% return a month. But if I can get 15 to 20% in 2 or 3 months, I'm still ahead of my goal, right?
Yeah.
So I made $400 off this position. I made 21% off of that, and I bought it right here. Let's see, 74 was the number right there. Yeah, it was the middle of July, so that sounds right. And let's see, so 1, 2. It took me 3 months for that position. 3 months is 15%. I made 21. I got what I was looking for. Right? That's how I trade. Is I look for that 5% a month, and I hold it until I can get it, because I know I will, especially when I get it at a decent price, and then it falls, and I keep adding to it, and my break even comes down to 68. It was like 67 and $63, something like 67.50 or something like that, or 66.80. I can't remember. But it fell all the way to 50 something. I should have thrown another 2,000 at it, but hindsight 2020. I added to the position. I was about $1,900 in. I made $400. That's 21, almost 22% return in 3 months. Right? I'm looking for 15% in 3 months. I got 21. Sounds good to me. Had
When
I
it
held it,
started doing the little, I'm sorry.
no, go ahead. I was just gonna say,
Okay, sorry. I was
had
just
I
gonna.
held it, I would have made a lot more.
Yeah, that's just another one of my questions. Like when it started doing that little dip there, how were you so sure it was gonna go up eventually? Like, wouldn't that be discouraging knowing that it's been falling for a whole month, right?
Well, I mean, but that's why I do shares, because I'm like, whatever, it's fine. It's Moderna. It's not going out of business. Hell, as soon as a vaccine comes out, their business is going to be ripping. You know,
Okay.
so you pick things that are good companies, things that are going to benefit off something you know is
Mm-hmm.
coming. You know, that's an example. Not everything you can pick and be like, okay, this is coming. I know that I'm going to profit off this. It doesn't always work that way. It did in this position. But it doesn't always work that way. But you know, if you pick good solid companies like this one's Altria. I always trade this. I've traded this for forever, and for 10 years
Mm-hmm.
I've traded this one, and I know the price on this. I mean, it came down here. I bought it right here at this support level, right at 36, right, and I sold it when it started coming up here somewhere, right before this resistance point. So I made more than my
Got it.
15% return. But the way I traded this one was, I'm just looking for it to hit close to this resistance point. I'm gonna get out um, before it does, because I don't want to be in the position where it hits resistance and then falls again. I want to get it as it's going up, or I want to sell it as it's going up near my resistance point, right? So I think I
Mm-hmm.
sold this for probably like 40.60, I think was my number, and I paid $36 for it, right? So I think I had 2,000 into that one too. I can't remember. I don't feel like doing math right now, but um, you know, we're talking 36 to 40. Let's see, 40, 60. I'm not sure. I'd have to do some more math, and I don't really want to spend the time doing that. But I know I think it was about 12% return on this one, and that was in less than a month. You know, so
Mm-hmm.
well above my goal. If you set goals and you stick to your strategy, you're gonna make money. But if you just go out there and say, you know what, I want to bank, and you don't have a clear plan or a goal in front of you, you're going to lose money faster than you're going to gain it. Whereas like my strategy, and I'm not saying you should do this strategy, I'm just explaining how I make money, is I go in at a certain level and say, all right, I want to hit at least 5% return for the month. You know, if I have to hold this for multiple months, now I'm looking for at least however many months that is. So let's say 3 months, I need 15% return because that's my goal, right? And if I can surpass my goal in a shorter period of time, I'm going to take the profit. If it takes me a little bit of time to get to where I'm looking, and then at some point it does get there and rockets past the 15%, let's say I hold it for 3 months, it rockets past 15%, goes to 35, you know, beautiful. Like I normally set trailing stop losses on things like that, where I think it's going to keep ripping. I'll set a trailing stop loss, and it'll just keep going. And boom, I should have done that with Moderna. I don't always do it. Don't get me wrong, but there are times when I do it, and it works out great. You get 35% return, 45% return in 3 months or 2 months. You know, things don't swing as fast as you want them to. That's why I like shares, because guaranteed I will not lose. If I get it at a good level, good support level, I invest in a proper company that's not going to go out of business, it's going to make me money. It's just a matter of when. I have yet to lose money doing that strategy. It takes time, and it's not huge money. You know, 120, 150, 200, 400, 90, you know, 150, let's see, 330. And then every once in a while, I get these huge ones like Tesla. I bought Tesla. You know, I'm up 10,000 off of that one alone. So I'm off so 5% off your total account every month. Well, with Tesla, that increased my account 45% just by itself. So,
And you only put in 5% of your capital into Tesla.
no, Tesla, I went a little heavy.
Oh,
I'll
okay.
admit I went a little heavy on Tesla. I think I did about 60% of my account, but I knew Tesla was going to rip. It was just a matter of time. Like there was confidence in that one. I had no doubt in my mind that Tesla was going to rip. So I went heavy. I go heavy on things that I think is going to rip and do well. You know, I'll do 3,000 to 5,000 on some stuff, but Tesla I did I did pretty heavy. I'll be honest. I've got 4 accounts, and every account was 60% heavy on Tesla, and it paid. You know,
Hmm.
everything is 45 to 60% up each account. Like some accounts are 45, some are 60, some are 50. It just, some of them I didn't have as much capital as I wanted to, right? So some I put 70%, some I put 50%. Just depending on how much money I had at the time available to me. I put it all in Tesla at that point,
Hmm.
right? And these are shares, not options. Had I done options, I probably would have made a shit ton more, but there's a lot of risk there, and the time frame is the problem. Right? You
Yeah.
don't get to choose the time that you get out and make money with options. The shares I get to choose. I'm still unloading shares. I still have, let's see, 8, 16, 28, 30. I still have 35 shares left, right?
Hmm.
And I've just been throwing, today I unloaded about 4 shares. Once it pumped back up. The other day when it was at 650, I unloaded a few shares. When it hit 660, I unloaded a few shares. I'm just whenever, because right now I'm in crazy profit. So at $600 a share, everything's 60% up, basically. So if I sell everything at $600 that I've got, everything's 60% up plus some. Some are probably 70, 75. Just depends on how much money I put in. But guaranteed, the lowest amount account that I have invested in a Tesla, for example, is at least 60% up at $600. So
Hmm.
I can't stress enough how important it is to have a strategy, right? And that's really what I'm going off here. I'm not saying you should change and go into shares or stop doing options or do options or whatever. I'm just saying have a plan, have a strategy, have a goal, stick to it. If something
Hmm.
doesn't fit into that plan, don't trade it. You know what I mean? Like it's very important to stick to something that's consistent. If it's working for you, if it's profitable, stick to it and be consistent. Because if you don't, you deviate from consistency and success, you're gonna find failure.
Got it. Thank you very much, Hostel. That really helped a lot.
You're welcome.
Thank you.
If there's no one on queue, I have a question.
I'm not sure there is, but um, let's
Okay.
see. Hold on. Does anybody else have any questions before I let Darshil go?
I just wanted to add about the person before. He said the visa, and you said it's better to have a long time. I just wanted to let y'all know that Stock Daddy alerted a visa swing expiring February 2021. I think if you want time in your swing for visa, that could be a good swing to get into.
I think he was limited on price though. But take a look at that one. Who was it that was?
Well, he said buy under 75 cents. Right now it's at 52, so I think it might be a good entry point. Because I
Yeah, it could
saw
be.
when I was swinging this, I saw like profit 3 days in a row, but I never took it because I don't know why I didn't take it. But I think it's a pretty good pretty good contract to get into maybe.
Could be.
Okay, yeah, I'll check it out. Thank you, man.
Yeah.
It's pretty cheap too, so if you lose on it, it's not the end of the world.
Yeah, you could just swing like 1-2 shares. It's not that bad.
All right. All right, Darshil, go ahead.
Yeah, so these days, like EV stocks are making me nervous. So, like, could you just look at the XPEL right now? What are your T's on that?
Yeah, I don't know why that one's falling. I don't know too much about this one. I mean, this one's a Chinese EV, just like NIO. NIO, I think, is doing well, isn't it? Oh no, it's kind of doing the same thing. Tesla, let's see. Tesla's the only one that's killing it. Um, I mean, I think at some point this is gonna. Shit, I don't know. It's already had a 100% retracement, basically. I think it's at a good support level, though. Or near it. I mean, it might drop a little bit more, maybe to right there. What price is that? 40.90, so $41. It's probably a good support level. But I don't know what makes XPEV tick. I don't know anything about it other than it's a Chinese EV. That's it. Same thing with NIO, to be honest with you. I mean, I watched the price action, but I don't know too much about the company. I know they're
Xperi is following Neo's stock.
yeah. So I mean, let's see. Let's take a look at Neo. It's at support, I would say. It could probably come down a little bit more though. So I mean, same thing, right? Same thing as XPEV. I think they both can come down a little bit more.
Mm. Yeah, even I thought though. I think like Expo can come to 40. That would be a great spot to pick up some shares. Like I can average down because I bought some shares on 49.50. And
Yeah,
average
yeah.
down at
Put
40.
a limit order for shares then. That way, as soon as it
So
crosses at 40, it'll auto buy. You don't have to watch it. If that's your plan, then definitely put some limit orders in, or a limit order for shares at 40.
yeah. So I was like a little scared because these days, yeah, Chinese EV makers are in trouble. So I thought this gonna go down to like 35 or 30. But yeah, as I can see in the support is 40. That would be fine, right?
I would go light. You don't know what's going to happen, to be honest. I mean, if they're in trouble, I don't know where the bottom is. I mean, you got support 25, you got support at pretty good, strong support down here at 17. I don't think it's going to go that low. Also, if you look at the volume down here, it's shrinking. So that could be an indicator that at some point here in the near future, it's going to bounce, right? Because right now you got majority red, right? I'd say from here to the right, you've got majority red, and it's shrinking, right? It was huge, and then it started shrinking, and then it grew a little bit. Now it's really shrunk. So if you see it fall below 25 million, that's still a lot. But if you see it fall around there, that's a good place to probably get in with shares, no matter what the price is at that level. I mean, again, set limit orders, but pay attention to the volume. See who's in control, see if it's shrinking or growing. That's important too.
But shrinking that means like the stock gonna go up, like there is a lot less volume, right?
Well, if there's shrinking of red, that means there's less sellers. Right? The sellers are starting to shake out. They're starting to disappear. There's not as many sellers. And then you're going to start seeing buyers come back in. Right? It swings back and forth. Right? I mean, you've got this whole section right here of buyers and sellers. You got this whole section of buyers and sellers. I mean, look at all this over here. Buyers and sellers, buyers and sellers. Then you've got some pumps, all buyers, and then dumps, all sellers. Again, all buyers, all sellers. See? All buyers, all sellers. And then again, tons of buyers. And now it's mostly sellers. All right. So at some point, you're going to see the selling fall off a lot more. And you're going to see the buying start to pick back up.
Yeah. And if I like I've mentioned, like if I wanna average down, like what are the ratio? I mean percentage as per the account to average to like dedicate it into the average down. Like if I have bought 50 shares of XPEL, right? Then should I invest another 25 share to buy XPEF at a lower at 40, or
What's
should I
your
wait?
what's your
Yep.
account value?
So like my account value is like 10,000.
And how much do you have in there so far, dollar wise?
So like for XPEF, I have invested around 2,000.
So you're already at 20% of your account. I'd say maybe another
Yes.
1,000's probably okay, but you're pushing it now. I mean, again, it's shares, so it's not that big of a deal. But if Chinese EVs are really in trouble, then you know it could be a bad thing, right? You might be holding that bag for a long time unless you just want to take a loss. Right? So there's that risk where you have to hold something for a long time. But there's the beauty in it is you don't have to be a loser unless you choose to be a loser with shares.
Mm.
So I mean, you could throw another 1,000 at it at 40, but what happens if it drops to 30? You gonna throw another 1,000 at it? Like you got more
So
money to
that's
put into the account so that you can continue to trade and bag hold that one
that's
while you're at it.
that's yeah. So is that a good strategy to like average down, like if you don't have account balance like 10,000, but you are certain that this company gonna go up, but it's just like a short time consolidation and going down. So
Well, if you're certain it's going to go up, then yeah, sure,
like
average down, definitely. I always promote averaging down with shares. If you believe that it's going to go up, you have confidence in it going up from where it's at, yeah, go for it. But if you're not sure, if it's like a not so good company or they're on the verge of bankruptcy and you got in at the wrong time, and don't keep adding to something that's not going to come back. You know what I mean? So just make sure whatever you're buying isn't going to go, it's not going to get crushed, right? And never buy at a high. Sounds like you bought near a high. Never do that. Like if I bought Tesla at 669, that's the worst move
yeah,
I could have ever done. Or in this case, Tesla at 630. Terrible idea for me. And I recommend no one do that. Don't jump into something because you see it pumping. You're chasing. You chased that. Is what you did, and you chased it on the wrong side. You chased it as it's coming down. I would be willing to bet. Right? You bought it within the last week or two.
because I was chasing it, like I thought like it's gonna go up big as a 72, 74. It's coming back,
So
and
let me ask you this: did you
now
buy it
here we
before or
are going
after it
down.
hit 58?
Bought it like 3 days back, 3 or 4 days back.
Okay, yeah. So you definitely were chasing that one. I mean, here's the thing you need to look at. Let me go closer in. Lower highs, lower lows. Right? You see something doing that, stay out of it. If you're trying to buy shares, if something's creating lower highs and lower lows, stay out of it. Wait till it goes sideways. Wait till it starts to break resistance points that it recently created. Right? You want it to break above, say, 45. You want it to break above, say, 47 and a half. Right? Those are levels that give you confidence that it's going in the other direction. Or it gets to a really strong support level that you'd be foolish not to buy it at. That's how I like to trade. I like to buy it at a level that I'm foolish not to buy. If I look at something and say that price is good, it's at a strong support level, and I don't buy it, I'm stupid. Right? If it falls below that, add to it. If I don't, I'm stupid. Right? Mistake. Don't repeat mistakes. Learn from them. Right? This is a good learning opportunity for you. And I
Yeah.
basically explained trend. Right? You bought a downtrend. So make sure you don't do that. Try to.
Yeah. But
I have a video on my channel that explains trend. So check that out. Maybe that'll help you as well.
I will check that out. So like for 4 hours, Expo support is $40, right? Like 40 or 39.
Yeah.
Looks like.
The 39 is really good. 39, yeah, 39 is super. Assuming that it's going to keep going up, I think it will. I don't see why it won't. I haven't heard anything too negative about NIO. So at 39, I mean, why not?
Yeah.
I actually know.
Not Neo.
Oh,
It
XPEB
was
was the one.
Expo. Yeah.
Gotcha.
Yeah.
Okay. Yeah, so Neo, I mean, I know quite a few people think it's going to hit $100 pretty soon, next few months at least. So, you know, if it hits 39, jump in. I mean, I would honestly throw a little bit of money at 41, throw some more at 40, and go in pretty heavy at 39 if you've got the money. It sounds like though that you've got 10,000. You've got, what did you say, 2 or 3,000 in it? I think you said 2,000. So you're gonna basically put yourself in a position where you can't trade anymore if you keep throwing money at NIO. Right? So you're gonna have to
Yeah.
throw more money in your account if you want to keep buying this dip. You could throw 10 grand at it if you want, but I wouldn't do that unless you can throw 50 grand into your account. Then you're, 15% of your account's allocated at that point. Right? You don't want to be over allocated. Always have cash on hand. I always
Yeah.
say all of my positions that I get into should never be more than 50% of my total account. That way I've got an additional 50% to average down on things that fall below strong support levels. Right? Especially with shares.
Yeah. So I'm like a little bit confused about Neo and Expo. I wanted to buy Neo, but I thought like Expo is much cheaper, so I bought that one.
Never buy something based on how cheap it is. Always buy something based on how strong they are.
Yeah.
I mean, just like Tesla. I was saying before about Tesla. I know they were strong. I bought Tesla and they ripped. Made me good money. They put
Yeah.
me at 100% account return or 90% return in 8 months of my total account. I've made 90% because of Tesla. Otherwise, I was right around 55 to 65% so far. I was right on target. 5% a month and 60%. I was right on target, just slightly above. I think I was targeting what it was looking like was right around 64% return for the year. And then Tesla came in and bumped me up to like 95% return of total account value for the year. So no complaints there.
Yeah. And what are your thoughts on CRM Salesforce?
I know they bought, I think it was Work.
Yeah.
I mean, they're going down because they bought Work. Work's going up because they got bought by Salesforce. I mean, I think Salesforce is probably, I don't know. Looks like it's kind of bottomed out, honestly, where it's at, potentially. But there's no support there other than what it just created past week. Yeah, I mean, there's no support where it's at other than where what it just created.
Yeah, it bought back like at 215 last time, and there is no support at 215. So I'm waiting to like it will get around 215 and I can average down on that one as well. I bought it for 225.
I think it'll actually fall a little. Well, I think where it's at is probably going to be the bottom. So, I mean, 208 looks like the next level. So the most recent high prior to its rip, that big green jump, was 208.56. I think that's going to be at the worst its lowest.
Yeah.
So where it's at, I mean, I would say, buy a few shares where it's at. If you got some at 225, it doesn't hurt to buy one or two, right? But again, your account, you're running out of money if you're into multiple positions and you've got 2,000 here, 2,000 there or something. You're running out.
Yeah, but there's a different account. So I have another
Oh, okay.
another 5 to 7,000 on a different account, so I can buy Sierra. That's a like long-term place.
I gotcha. All right. Okay. Do you have any more questions before I move to someone else?
No, thank you. Thanks for those clarifications.
You're welcome.
It helps.
Okay.
I want to go next.
Okay, who's that? Sorry.
Desampling.
All right, go ahead.
So I've been just reading on the news, seeing and tracking UPS. I don't know if you've tracked them or watched them at all. Interesting enough, they're going to play a crucial role in, naturally Christmas. And then in addition to that, they're going to play a crucial role in distributing portions of the vaccine. Well, I also heard that they created a freezer farm in Kentucky that's supposed to be housing certain pieces of equipment, and if not, parts of the medication that will be distributed, both from Moderna as well as for Pfizer. I'm kind of looking at one of the calls for January 15th specifically for $1.80. Wanted to get your input on what you thought about it.
I'd probably go a little further out. First question, how long do you think it's going to take for all of that to come to fruition?
I think that, well, twofold, right? I mean, just tracking it from news outlets, they've got a short supply that I believe is probably already distributed to most of the area or regional hospitals at this point. I think realistically, the second phase of it's going to happen next year. I think it would probably be February. And based off the logic that I used from you on my last discussion with you last Thursday, affording myself some additional time, I think March is probably the safest bet. But that's just me kind of looking from the outside in.
So my opinion on this would be leaps, because you really don't know the time frame on this. It could go further, right? How much is a year away? You said what, 180? Was that right? Yeah, 180.
Yeah, that was the strike I was going after.
Okay, so I'd probably go with the 185 just because it's got a lot more OI. And that's going to cost you 1,200. Let's see. Let's just do a little bit of a. So let's say by March. Let's give it the March time frame, but have the leap. So March. Okay, there is no March time there, but we're gonna do it anyways. Let's say middle of March. is probably going to be the expiration date. So let's say it hits your strike at 180. It'd be $433 if it hits your strike. By March, if it hits 180 by March, it'll be 433. Let's go into February and see if it hits that strike. 180.
The variable that I don't know is, they may be refrigerating in their freezer farm. I mean, I've heard of solar farms, but this is my first freezer farm I've heard of, because they have to keep the medication at a certain temperature.
Right.
That
It's
they
probably
may
like
be.
a distribution center or something too.
It is, and they've built the farm that's biochemically contained and all that fun stuff, right? Lab-like environment, I guess, would be the safest bet that I could say. And I'm not in the medical field, but I'm sure there's going to be storage costs, because keeping things specifically at the temperatures we're talking about, they're probably putting a cost against it to either the manufacturer and or the buyers, I would assume. But that may be something that will help drive the cost upwards, starting as early as next week. So there's that variable that I just can't account for. I'm looking at it from the shipping perspective, or from a logistics perspective, but there is that variable which can also play a role in driving the cost or the amount up.
So there's too many unknowns here. Right? That's what makes me say go further out if you can. If you can afford it, go further out. Give yourself more time. Because, if that stuff doesn't happen in the time frame you're looking for, you're just going to be out of money.
Okay.
Whereas if you buy something a year from now, it's bound to happen sometime between then, right? I mean, let's just take a quick look at every month here. So we'll go to April. 180. That's $300. May, 189. So by June, it's probably going to be the last one you're going to see money. Well, maybe not. 105 by June. July is probably it. Yeah. If it doesn't do anything by July, if it has not hit 180 by July, it's going to have to go to 190 for you to see profit. So you got basically till July for it to hit 180 to get out with a small profit.
Got it.
And every month prior to that, you're looking at profit at 180. And that's if you buy the 1 year leap, the January 2022, which is $1,200.
Okay.
So I mean, me personally, I like calendars, man. I love calendars for this type of stuff, because if you're anticipating something, I mean, me personally, I might look into a calendar. I mean, let's just take a quick look here and see what this is going to pay. I'm going to probably go a little bit more expensive, though.
When you say expensive, you're specifically talking about the premium?
Yeah, the strike probably get a lot closer to at the money, so I'd probably go with this 165. I mean, I can afford $2,000 personally. Let's just take a look here and see what we're looking at. Because I mean, other thing is, the closer you get to at the money, the faster you'll see profit if you can afford it.
Yeah, I've been starting small. I did the paper thing that you had suggested the week prior. Last Thursday after we talked, I kind of went forward with what I, just kind of used laying down the fundamentals and putting them into practice. Did I make a ton of money? No, but it built my comfort level where I can start to look on my own and develop, go through my checks. Really realistically, that's what I'm starting to do, is get more comfortable doing my own checks, making sure where I'm at. Still looking for that second glance over, which is what I've been, the next thing that I've got to be able to shed. But this morning I just randomly woke up and I was looking at one of the Tesla calls. You're gonna laugh. I mean, it's not a ton of money. I think it was like the 650 strike. It's like $72 last night. Woke up this morning. It kind of Tesla came down a little bit, and I ended up picking it up for $17. So I was like, all right, cool. This works for me. I was already doing my research on it. It came down significantly. I picked it up. Maybe like 20 minutes later, I ended up dumping it, and I walked away with like $50. Was it
That's
great
actually
money?
that's okay. That's not bad.
Yeah, that's
yeah, and
That's actually
200%
great.
plus return.
it was 200% exactly. So I was like, dude, I mean, it's not big dollar figures, but those, I'm just trying to build my confidence. I have the money. It's not that. It's just that I'm not going to throw money out there just to, I see a lot of people just throwing shit at the wall to see what sticks, and that's just not something I'm comfortable doing.
Yeah, no, I 100% agree with you. That's never ever do that. I mean, like, you want to build the confidence, like what you're talking about, right? I mean, it's a great idea, but there's certain things you got to take into account. What's reality, right? And I think you're thinking of reality, and that's a good thing. A lot of people don't, right? And I'm sitting here looking at these particular. So I'm looking at this calendar and I'm thinking, 165 is actually. I need this stock. I need UPS to fall down to 155, and then I'll go for a 165. It'll pay better if it hits it, and I think it would be a lot better.
Well, what would the pay be? Just through shits and giggles here.
Well, it's hard to say because the stock price isn't down there, so I couldn't tell you. It has to be down there for me to look at it and say, oh, okay. Well, I guess I could. Let's see, 165. So I'd have to raise it another $10, basically. So let's raise it to 175. On 20. What the hell? Oh, okay, January 2015. There we go. It's still about the same, actually. So it'd be better, actually, for me to. So some of this doesn't. You'd have to be quick with something like this, honestly, because once you get to 190, it's like, ooh, now you start losing because that short position is going to start killing you. So, and with this kind of stuff, she could rip hard. If you're not quick and catch it and get out, then it's gonna be a bad day. Because with this kind of calendar, I mean, we're looking at $1,200 loss at the worst, short term. If it jumps up, up here to 260-ish, but that's. I mean, again, that's not unheard of for things to do that, especially with this COVID stuff. I mean, look how Moderna ripped. And if this has anything to do with Moderna and making profits off of them, let's see why this wouldn't rip either to 200 at least.
Well, that's kind of my thought process, right? Is tracing what else is impacted by or what else is influenced by, what I've been focused on as far as my research. So,
right,
around the medications, and then naturally, how does that play out in the supply chain? How does that play out into, everything kind of. So I don't want to just start researching something brand new because that takes time. Where it's easier to have a piece of the puzzle already where I'm looking for the next one to connect to it, make a bigger picture is kind of, how I'm approaching it, so to speak.
Yeah, I mean, I think you got the right idea. It's just a matter of can you find a way to put a pin on it, right? Can you pin the
Right,
tail on the donkey?
right,
And
right.
if you
And I'm flying
can,
blind, right?
then definitely go for something. But if there's too many, in my opinion, if there's too many unknowns, too many time frames that you can't, specify or at least say within this month or 2 months, then you're just there's more risk involved, so the real goal with options is not how much money you can make, it's how much money can you prevent from losing. Most people get into this say, oh, how much money can I make today? I get into this and I say, how much money can I prevent myself from losing? If I'm not losing, I'm winning, right? So if I can prevent myself from losing, then I'm winning. So that's how I approach it. A lot of other folks, they come in here and be like, I want to make $1,000. I come here and say, I don't want to lose 10. Whatever I can do to prevent myself from losing $10, I'm going to do it. So if you can figure out specifics and you can prevent loss, then whatever you make is a bonus, right?
Okay. Yep. No, and that's kind of, I see people talk about, the dollar aspect of it. And that's really not how I approached it. I'm approaching it more from is it a positive gain or is it a negative gain? And I guess you're kind of saying the same thing, but in different perspectives. I've always wanted to have a 200% day. I'm not gonna lie to you. It's one of my milestones that I kind of set for myself. I hit it. Was it a $10,000 milestone? No, but I hit 200%. Now can I continue to repeat that activity? Is kind of how I want to go about doing it. So
Right. Well, that's the
I
other thing.
think
Percentage is a really good way to look at it. Like I was saying earlier, 10% return. I mean, if I got 5 grand in something, I get a 10% return. I'm looking at $500. If I got
yep.
50 grand into something, I get a 10% return. That's 5 grand, right? 10% returns, in my opinion, is the way to go. Never look at dollar amount, just build your account. And if you can get a certain percentage return off of what you've invested, that's the goal, right? I mean, imagine if you've got $1 million and or imagine if you put in $100,000 into something and you get a 5% return, right? Sorry, 5,000 is not 5% of
I'm with
50.
I'm with you. No, I follow along the logic. I just sometimes there's little milestones that I think I like to accomplish if the opportunity is right. This one just presented itself. I mean, it was very fast. I think the time difference between the East Coast versus the West Coast is playing to my advantage versus I guess I could say to myself I've got a part-time job that's I'm doing well at just by waking up a little bit early and having my coffee and staring at some screens. A lot better than doing something else. So it's
Definitely.
definitely something that I'm enjoying. My lunch breaks. Versus doing anything else. It's nice for me to sit down because hey, 12 o'clock, I'm going to buy it to see what I'm going to dump the next day. So, I mean,
Right.
that won't be a long-term issue, but it's the timing is beautiful. I'm probably committing, half hour to 45 minutes in the morning, and same thing in the around lunchtime. So I think this week, I'm clearing probably more than what my paycheck would be for 2 days. So it's beneficial, definitely beneficial.
Yeah, I mean, that's huge. Like if you can totally do that, that's huge.
The next question is, it's just, I think you're hitting it right. Finding what I'm happy with maintaining as a steady pace. I'm not. This isn't a sprint for me. It's more of a marathon. Can I keep pace? Am I going to burn out and create peaks and valleys? I don't want to create the peaks and valleys. I want to have a steady growth cycle. Is kind of what I have set up in my mind. But I'm still discovering that as I'm going through these steps and learning everything.
Well, you'll continue to discover it, and you'll probably change and adjust yourself as you get more experienced. I mean, I know I have, right? I mean, I went from buying options to selling options to doing share swings, now back to selling options again. I mean, and my strategies have changed every time. Now, there are strategies that I use that have worked for me in the past that will always work for me, and I will never stop doing them. But there's newer strategies that I'm getting into, so you're going to continuously learn and gain experience, and you're going to mold yourself into the person you really want to be. And who you are today is not going to be who you are in 10 years as far as options trading. And I'm sure, I mean, you sound intelligent enough to know that that will be the case. I mean, anybody that grows mentally, specifically mentally, is going to be a different person in 10 years, and it's going to be a better person than you are today. Right? And that's the goal, is to be better than who you are today, tomorrow.
Right. Now that brings up another question. Since you've been doing this for some time, how do you adjust your knowledge of industry, and how does that play a role into what you're investing into? Is that just where the biggest gainers are, or the biggest movers are, where you start to invest your time and energy to do research? Or is it always been, and I heard you say you didn't like oil a little bit earlier, is it just that I'm not a big fan of oil because there's a lot of risk in it? I am a big person into technology, so I focus more on technology. Or do you just kind of follow what the industry is doing? And,
Well,
I guess,
it's hard to say, because the way that I've been trying to do it lately is I want to try and have multiple industries in my watch list. I don't want to invest in more than one equity per industry. And I also want to see how each industry reacts. So if one's going up, which one's going down, so that I can play both sides, right? Or let's say, for example, all I'm doing is swinging shares. If I can see every industry out there and I watch it religiously, and I can comprehend it and be able to know that when tech goes up, real estate goes down, or something like that, that means that if I get into, let's say tech's going up and real estate's going down, I get into real estate, and then tech starts falling, real estate starts going up. All right, sweet. I'm going to wait till real estate hits the number I'm looking for and sell it. Now I'm looking at tech to find out when it hits the bottom and get into it. Right? So you want to, maybe that's the answer that you're looking for, is, for me, it's never be in one industry more than once. Pick the best tickers per industry if you can, and the ones that are very solvent, and try to pay attention to all the industries in one watch list if you can. And it's hard. I'm going to be honest with you. It's not easy. And particular industries like oil, I write off, because I see the future as oil not being as important. It's going to probably not be like, so I think that oil, with the Biden administration, if they cut out natural gas and coal, oil is going to go up in price. But I don't like oil because they're trying to get rid of it too. And the only reason it's going to go up in price is because supply and demand, right? Because the rest of the countries across the world, they're still doing oil. They don't give a shit about saving the world. China doesn't care. India doesn't care. Europe, I guess Europe does. Russia doesn't care. The Middle East doesn't care, right? And they're all the producers, so they're going to be pushing it out. So if the United States stops producing oil, that creates a gap that somebody's going to fill, and they're not going to fill it fast enough. So the price is going to rise in that period of time, right? There's the oil going up, but at the same time, if the United States does get away from oil completely, that's a huge market that these sellers no longer have. So at some point in the future, if that happens, oil is going to come down and it's going to stay down. It's not going to go up anymore, right? If the world becomes, what do you call it? Renewable energy, 50% renewable energy, oil's going to get crushed, right? And I see the world going that direction in some areas. Right? It's a lot more than it used to be, that's for sure. So that's why I don't like oil. I'd say, oil short term, yeah, it's going to have its movements. It's going to be volatile. It's going to pump. It's going to dump. But at what point does it stop pumping? Because I think it will. And I think EV stuff is going to get bigger. I think solar is going to get bigger. But that's one reason I don't like oil, because you get caught on the wrong side of it, you're going to be bag holding for a while. Right? I'm not interested in that. Same thing with like precious metals. You get caught on the wrong side of it, you're bag holding for a while. I've got one position on SLV. I'm bag holding. I've been holding for 3 months. It's probably going to be one of those where I don't make the return I'm looking for. I will make something, but it may not be what I'm looking for. Right now I'm in the red. So, understanding how the markets react to one another, the industries rather, if you can pinpoint industries that actively work in unison, whereas one goes up, one goes down, that's going to be huge. I have yet to really put a pin on that as well. It's honestly during COVID, so I think I felt like I was getting somewhere prior to COVID, but now with COVID, it's like that's all out the window. Right? I guess the
That
short
answers.
term thinking is don't invest in one industry more than once. If you're going to do EV, pick one. If you're going to do real estate, pick one. If you're going to do oil, pick one. Don't do 3 EV. Don't do NIO, Tesla, XPEV, or don't do Oxy, Exxon, and BP. Don't do Moderna, Pfizer, and AstraZeneca. You know what I mean? Like,
Right.
diversify your industries.
Right. It's kind of like not having a single revenue stream is the concept, I guess.
Yeah, I mean, I'm more think of it as when people talk about retirement and they say, "Oh, diversify your portfolio," which honestly, uh, long-term retirement positions is bullshit, like 401ks. But the whole diversify your portfolio, it does make sense. You don't want to be in one industry that gets killed. Like when oil got killed earlier this year, if you had 3 or 4 positions in there and that's half of your account, you probably got hurt pretty badly. And if you don't have the stomach for it, you might have took some losses, right? So you prevent yourself from getting crushed. I mean, I like month to 2 month trades. I don't want to be in Oracle and Adobe at the same time if they get a crush, right? Or I don't want to be in gold and SLV and WPM at the same time when precious metals stops ripping, which it did, right? You don't want to be in Bank of America, Citi, Wells Fargo when they stop pumping, they start dumping, right? So you get the point. Like, diversify your industries, and that will automatically diversify your portfolio.
Got it.
Yo,
Perfect.
can I ask a question after this?
Yeah, I'm good. Thank you so much. Also,
Of course, you're welcome. Go for it.
Oh yeah, okay. So hostile. The stuff that you're telling me about, finding a trading style and stuff. I think I figured one out for me at least. Uh, the support and resistance videos that I watched on your channel were actually really helpful in doing this. I'm not sure if this is a strategy though. But the opportunities I find are usually around like the last 2 hours of the market, and that's when like the trends break and then support and resistance lines start appearing, and then once it hits the resistance again, I would just draw a resistance line, and then after the break of the trend, it would form another support line from there, and I would make that a key support. And I think that's a trading strategy that I'm trying out right now, I guess. I mean, can I show you it on your screen on Snapchat?
I don't have Snapchat, but you can send me screenshots.
No, like how do you say it? Like just go to the ticker.
Oh yeah, sure. What is it?
Snap, SNAP.
Oh, okay, gotcha. Sorry.
On the Tuesday chart. I was on the 5 minute time frame. I didn't see this on TD because I wouldn't see anything on TD. Yeah, on Tuesday. It was really obvious actually. Tuesday's setup was really obvious. Can you zoom in a little bit? Oh,
Hold on.
I'm not gonna lie, I'm having like a lot of trouble like just looking at the charts on TD rather than yeah, it's hard to see. Can you like drag it out a little or something? Like make the sticks longer.
Hold on. I'm gonna have to adjust the time frame.
Yeah, but basically you know, I'll just send a screenshot. Is there a way to send a screenshot or something?
Here, try this first before you do that.
Okay. So it was forming one of those triangle thingies, and it was bouncing off 50 on the last two bumps. After it broke, it's really hard to see on the TD chart, but if you go into like Trading View and
What's the exact time frame?
I'm actually like not really sure.
You said it was like the last 2 or 3 hours of the market, though.
Yeah, it was. I could see the pattern right there at the beginning. I'm pretty sure it was an ascending triangle.
If you click on the prices and drag it up and down, you can stretch the candles out.
Oh yeah, that's right. There you go.
Now that I look at it, honestly, it's okay. So I can see it here. So it was forming I'm not sure if this is actually called an ascending triangle, but at the beginning, like for the first until 12:15, right? And then it broke down below it. So then I disregarded all the support lines on that trend because it's part of that pattern, and the pattern broke. So I just assumed it's not necessary to like mark those support lines, and then I used the what is it called, the 1230 the 1230 support, I'm pretty sure, and I used that as support because it basically it stopped the what is it called, the break of pattern down, and it started making it go up. So I used that to how do you say it? I used that as a key support level, and then at like 1345, I used that as a support. It's pretty obvious. It's the 50 level, and it's like it was just getting rejected off of that, obviously. So I waited for the pullback after it hit 1430 again, and by this time I was thinking like maybe I would want to get puts, but I didn't get any. So I just watched it move, and then by the time it hit the support again, I was like, okay, this is where I want to buy some calls. I didn't do it actually because I didn't actually have like real time data, but that was just my thinking on it at least. And then
Well, I
I
mean,
wanted
what you're referring to is trend reversal, and I see it. See what you're talking about. So I'm gonna draw that line. You're talking about this right here,
yeah,
and then it does the same thing here.
yeah. It's easier for me to see on a line chart looking at this stuff.
Yeah, I mean, it sounds like you have a method. I would caution you to try not to use 1 day, 1 minute stuff or 5 minute candles. I like the 5 day, 15 minutes. The further out you go, the stronger the candles and support levels and price action becomes. You can get caught in traps in very short time frames. So it is very dangerous if you're not careful. It's very dangerous. I mean, what you did, I think, is there's a rhyme and reason to it, and at least you have that. It makes logical sense of what you're doing, so that's good. My only caution here is be careful of the very short time frames, because you're looking at just this little bit of time right here. Look at all the other days, what could have happened, right? I mean,
Yeah.
like this day, right? If you're doing puts this day, right? I mean, it just, that's all I'm saying is be careful of the short time frames. You can use them, just make sure you go further out to look and see what it is that you're seeing on the short time frame. So if you see something you think is a good setup, go further out and just get a better idea of what you're looking at holistically, if that makes sense.
I didn't see anything that was actually relevant, any key support levels that were relevant to that actual setup intraday. So that's why I didn't look at it. I actually, like, just personally for this ticker specifically at that on Tuesday, I didn't look at it like any other setup, any other time charts except that one.
I see. Well, I mean,
Is
again,
it a bad thing? I mean, I personally didn't think it was necessary for that one.
it may or may not be. I mean, it's objective. I'm just saying, be cautious. You can get caught in a trap. That's all.
All right.
But it sounds like a good analysis. I understand what you're saying and I see it. So definitely you did learn something when you watched my videos, because
Yeah, definitely. I
that's
actually did.
exactly what I thought is
Well, in like
reversal.
5 minutes.
So I mean, that's great. You did learn something. So kudos.
Yeah.
What I mean by strategy, I mean, I guess that's part of it. Yeah. I mean, when I talk about strategy, I talk about long-term strategy, long-term goals. You know, you look further out to the future. There are short-term strategies and goals. There's midterm and there's long-term. My personal opinion is you develop the long-term one first and create consistency in it so that you can have consistent, quick and easy, not quick and easy, I'm sorry, consistent returns that are safe. And then you go to the medium term or medium time frame, and you can potentially implement that long-term strategy into the midterm and continue to potentially do the same thing but shorter time frame. But once you start getting to the very short time frame, it gets tricky, right? So I like to get people to do foundational consistency trading where they make money, a certain amount of money, or rather a percent of your account over a period of time versus today, right? So if you're trading for just today, the strategy and the goal can get diluted, right? Because emotion comes into play with very short time frame trading. Emotion becomes very much of a factor. Whereas, like how I trade, 1 or 2 months out, there is no emotion for me. I'm actually happy when it comes down in price. That means I'm getting more, right? So if I bought in at a certain level, I'm like, all right, I'm happy. I like this price. And then it falls. Most people are like, oh no. For me, I'm like, sweet. That means I'm getting more because I like the price I got in at. It went lower, even better price. My goal is still the same. My goal hasn't changed, right? But when it comes to short term, it's a different ball game. So I guess what I was really trying to say to you before is develop a long-term strategy and find consistent returns in that. And then you can start developing additional streams of revenue for shorter time frames, right? And sounds like you're young. I would say that if you think about 20 or 30 years out and creating a small return from now until then that's consistent, you're going to have a hell of a lot more money than you thought ever possible.
That's true.
All right, so the way I always preach it is with the Roth account, $6,000 a year, 5% return a month. every month, you continuously put $6,000 in every year, you're going to have $375,000 in 10 years. That's more money than any 401k will ever pay anybody. Right? I could be putting 401k money away for 10 years. I'll probably have $300,000 or $400,000, but the moment the market decides to correct, bye-bye. There goes $200,000. Now I'm gonna have to wait 5 more years for that money just to break even again. But if I'm doing what I'm doing right now, $6,000 a year, 5% return a month, I'm in full control of my future. I will have $375,000 in 10 years, guaranteed, and that money's not beholden to a mutual fund or 401k account that I have no control over, right? And if you do the math, another 20 years, that $375,000 number is going to easily be 2.5 to 3 million. Because once you start getting up to 500,000 to $1 million, and you're making 5% return a month and 60% a year, I mean 60% a year on your account at 500,000, that's 300,000, right? 60% of your account of $1 million in a year is 600,000, right? It exponentially grows. The bigger it gets, the faster it grows. So yes, if you're young and you have a small account, it's going to take you a while to get to 100,000. But once you get to 100,000, then 300,000 is going to come faster than 100,000 did. And 600,000 is going to come faster than 300,000 did. If you continuously do consistent trading, right? And you make sure that you do something that is going to solidify returns. And as you get to that higher level where you're making those big returns, this is where then I say, okay, now you can start looking at day trading. Now you should start looking at day trading rather. Now you should start looking at intraday trading. Everybody wants to start at intraday. And there's no problem with that. By all means. I just think that's a lot more risky. Right? And especially, the time frame, like I want to make money today. Me personally, I'm not thinking about today. I'm thinking about when I'm 60. What do I want when I'm 60? I want to fly in private jets. I want to go to Tahiti every other month. I want to have a 10,000 square foot house with 300 acres. I want all these things. How do I get there? I think about 30 years from now because there ain't no way I'm going to get it in 10 years. No way. But in 30 years, with the type of trading that I'm trying to do, or that I am doing rather, I mean, again, if I make 95% return on my account every year, imagine how much that is when you got $1 million. That's 950,000 in a year. And this is tax-free, Roth. So, just think about that. Right? I'm not trying to deter you from, doing what you're doing, right? You are learning. That's great. You're coming up with strategies. That's great. You will make mistakes. That's normal. Learn from them, but also keep your future in mind. Like I said, it sounds like you're young, so
Yeah.
the more you think about your future and the more you think about retiring, the faster you're going to get there. Versus, you
Yeah.
want to buy an M3 in 2 years. Unrealistic, right?
Yeah. I see. So you think I should try and focus on long-term consistent um, growth? So you think do you think I don't really get it then. What are you trying to say then? You think I mean I'm not trying to like make super duper quick money. I'm just trying to like get a strategy down.
Well, yeah, I mean,
But
I'm not saying
long term.
that's the case either. I mean, I understand you are trying to make a strategy, and by all means, keep doing that, right? Um, all I'm saying is think about your future, right? Again, I keep saying it sounds
That's
like
true.
you're young. I mean, are you 18, 21?
I'm like 17.
Okay, so yeah, I mean, you're just getting started in life, basically, and you've got decades to make something of yourself, right? And by age 30, you can have more money than everybody at age 30, right? If you do the right thing. Now, you might find a strategy that works really well for you, and you might make $1,000 a week. Who knows, right? I mean, I'm not saying that you won't do that. You very well could, right? You're here, you're learning. Your goal is to make money. Your goal is to be successful, right? At minimum. So
Yeah.
that's the starting point, and you're gonna go through stuff where you don't. You're gonna run into a wall. You're gonna be like, crap, I don't know what to do now, right? That's normal. Just remember, your future is coming, and if you don't plan for it, you won't have one, right? You can do these things in between, great, but create a foundation for yourself, and then build on top of it, right? You can't
What do you
have a
mean?
building without a foundation.
Do you think I should be like, are we talking about the stock market? Or are we talking about my thinking about life?
All of it. It all is relevant. You know, your mentality. So if you have the right mentality when you're an investor, you know, investing in the stock market, you're going to make the right choices. But if you have the wrong mentality, like some kids come in here and, you know, they're throwing $5,000 at one stock or one option. You know, they want to buy Tesla. They get 2 contracts of Tesla for $2,500 a piece. Tesla tanks. Bye bye. There goes your money. See you later. Go get a job. Come back in 3 months when you've made back that $5,000. Right? That's poor mentality.
Yeah.
But if you're in here and you're taking your time and you're learning, you're asking questions, you know, you're doing things to build yourself up, even if you're not making money or even if you're losing a little bit of money, it's still okay, right? Having the right mentality is the first step to being successful, in my opinion. If you have the wrong mentality, you get nowhere in life, you know. So I could preach on and on and on about this. I don't really want to bore anybody with it, but I think you have the right mentality. I don't think that you're out here trying to, you know, make a quick dollar. And you're trying to learn. You're trying to build a strategy. You're asking questions again. So I think you're doing the right thing. Just don't forget about your future. Don't forget about the other things, right? Don't, you know,
All right.
look at what's in front of you, but look what's ahead of you as well, right? Far ahead, right? Had
Yeah.
I done that when I was your age, I'd be rich right now. I swear I would. Right? I didn't
Well,
start thinking like this until I was 26, maybe, and even then, like, you know, 25 or 26 years old, I didn't have the information at my fingertips like there is today. Right? So there's so much more out there today. I mean, just the server in specific, you know, those of us that are members, support members, and analysts and admins, you know, we're all of us are willing to teach anybody anything we know, right? I didn't have that opportunity. I had to learn everything the hard way. I had to learn things from people that didn't want to teach me. I had to dig it out of them. I had to fool them and deceive them into telling me because they didn't want to share, right? It's the
Yeah.
opposite here. We're, you know, we're happy to share. Like I'd go out of my way to help anybody that needs it, right? Because I don't want people to go through the time and effort and struggle that I went through, because it's a pain in the ass and it's demoralizing. I mean, I guess it would make you a strong person, but at the same time, you know, if you are mentally set, prepared for what you're trying to do already, then
Yeah.
it's just going to make you even much more successful, and it's just going to be a better life for you. That's all.
All right. I see. I recorded like my entire trading session yesterday. I'm gonna edit it down and then I'm gonna send it to Tilio so he could watch because he said he's down to watch it.
Well, that's cool.
Yeah.
Yeah, I
Okay,
mean,
so you're just telling me that I need to just think about what's ahead in the future and I mean
keep doing your strategy, keep doing what you're doing, but just add that into your playbook, right? Add in, you know, where do you see yourself in 10 years? Where do you see yourself in 20 and 30, etc.? You know, like just in life in general, as an investor, you know, a career, all that stuff. Right? This server isn't just about stocks. It's about all that. Because if you don't have, like I said, the right mentality to trade, you're not going to have the right mentality for a job or relationships with your family or your girlfriend or potential wife. You know, just interactions, interpersonal communication, right? If you don't have the right mentality, shit ain't gonna go your way.
Yeah, that's
You know,
true. Yeah. I mean, I personally think I have a very strong mentality, like in the sense where I don't know how to explain it, but I guess I'm just really disciplined about life and I don't like find excuses to slack off, I guess. And I mean, I don't know how to explain this, I guess. Yeah, I guess I'll start thinking a lot more about the future then too. What I want to see myself as in years later and stuff. That's
just
true.
remember that manifestation of the mind is real. What you think becomes reality if you so choose it to be. Right? If you decide you want something and you go for it, you will get it. Right? I mean, everything that I've ever seek what's the word? Seeked? Is that a word? Seeked? Everything that I sought, that's the word. Everything that I've ever sought out in life. I mean, I'm a pretty driven person. So everything I've ever sought out, I've got. But it wasn't easy, right?
Yeah.
You know, you sound like a intelligent enough person to know that stuff isn't easy. But when you seek something out, you'll get it. And it's that whole mentality of um, your mind is a manifestation of reality. If you think positively, positive things happen. If you think negatively, negative things happen. I mean, there's just so many. I mean, I could even get into spirituality with all that, but again, I don't want to go too far.
Yeah, all right. Okay. Yeah, I see. I see. Okay. Okay. Thanks,
You're
Hostile.
welcome. You're welcome.
Hey, Hostile. Um, I think you already have explained about the calendar call today, and I'm not, I do not know that much, so like it kind of went over my head. So like, could you tell me what the exactly method that you were combining? Like, I think there was a calendar along with leap calls that you give an example of Amazon 40K that you can get 4,800 something like on the premium.
Mm-hmm. So
So
basically, you're buying a call far out in expiration. You pick a strike price that you think the stock's going to go to. You're pretty confident in, 80% sure, or 75, 60 even. And you sell calls against that same strike for shorter period time frames to take in premiums to shave off value off of that leap. And at some point, one of those leaps, or I'm sorry, one time it's going to hit that price. If you chose the right strike, it's going to hit it. And when it does, that leap's going to pay. Right? The leap's going to pay more than the short position will. And honestly, if it's close to expiration, like let's say just a random number, $200 or 200 strike. If you sold a leap on that, and then I'm sorry, if you bought a leap and then sold a call on the 200 strike, and it's got like 2 days before expiration, initially it paid you $2,000 for that position, and it's at like 201 in the money, you're still in profit because the premium is more. So you add the 2,000 to 200, right? So it'd be what, 202 would be your break even. So you'd be in profit. So you could literally. That's why it shows the profit that it does. That's why it shows um, this little crest. Let's see if it's still on Tesla. Nope. I think it's still on Amazon though. I need to go to the right date. Yeah, that's why it shows this crest right here. Because, let's see, was it 32? So right at 32, you're at max profit, really. Right? But it starts to crest, and that short strike is still paying you until you get somewhere in the middle. I think maybe, I'm not totally sure. I mean, I know how it works with. So when you're doing cash puts or covered calls, it's very simple to understand. If I sell a covered call at 200, or let's say $20, if I sell a covered call at $20 and I got paid 200 bucks premium for that covered call, and it's expiration day, and the stock price is 21, I'm still $100 in profit because my $200 premium covers me up to $22, right? So I could literally sell that position, keep the shares, hope that it runs up some more, and then dump the shares too, or set a trailing stop loss on the shares at that point. Now, there's many ways to go about doing it, and it's very similar with calendars. A calendar is a covered call, except you don't own shares, you own a leap. Right? So a leap is the same thing, except it's got an expiration date on it, whereas shares don't. And it's not going to take away your leap if it goes in the money. It's just going to, the price is going to drastically increase for you, right? Your max profit at your strikes of 3,200, for example, on Amazon, max profit right at 3,200. So the moment you're in a calendar and it hits your strike, that's when it's time to get out, no matter what. Does that help answer your question? Does that clear it up?
Yeah, kind of. So can we call as a credit spread too?
No, it's not a credit spread. Not at all.
Okay.
So credit spread is just directional. So credit spread is going to be, let me pick a different one here. So let's say I'm bullish on, so with credit spreads, you have to be bullish or bearish. You can't be like a calendar, I want it to hit my strike. With credit spreads, you want it to go away from your strike. You want to be out of the money as far as possible, away from your strike. And you need to be directional. Right? So let's say, for example, I want to be bullish on Apple. And credit spreads are only shorting positions. You can't do credit spreads when you buy. That's a debit spread. This is a credit spread. So I'm bullish on Apple. My long strike is 120. My short strike's 122.5. I want the price to go above 122.5. Let's see, expiration of 15. So max profit for me, it's going to be, I mean, I'd say somewhere up here, 127, 128 is max profit for this position. My short strike's 122. Credit spreads are best if they expire worthless, but 9 times out of 10, they're going to expire worth something. So it's going to debit that much out of your account. As long as it's above your short strike, you're going to win. The closer it is to your short strike, the less you keep. So let's say your short strike is 122.5. Honestly, above, according to this, 121.64 is basically break even, slightly profit. But that basically just covers your contracts. But 122.5, it's showing $41 profit as long as IV stays the same. Right? And that's great. That's a terrific position. Make 41 bucks. And that's what 41, almost a little bit more than 30%, maybe 35% return, right? The credit spreads don't pay as much. They're for a lot smaller account, but they're you have to get the direction right. You have to get in relatively at the right time. You're not going to hit it the nail on the head. You're not going to get in at the perfect time. Ideally, I like to get in at support level. Let's say 122.5 is support for Apple. I like to get in there and then it go against me just a little bit. Say go down to 119, 118, and then start a bullish movement upward. Because if it goes against me for a little bit and then goes back out of the money, I'm going to see a good return already because it went against me. The same thing goes for cash puts. If I sell a $20 strike, a put strike for $20, which is $2,000 premium, basically owning 100 shares, and it goes against me. Let's say it pays me 200 bucks. I'm down to $18 break even. It goes against me the first week or 2 weeks, and I've got 45 days on this. The moment it comes back to right at break even, as far as the strike number goes, I'll be in profit, which will probably be pretty decent profit. So that's the beauty about options selling, is if it goes against you, it's actually okay. As long as it comes back just close enough, right on top of your break even number as far as the strike goes, you're going to be in profit. Right? I've been in positions where I'll be in a credit spread for 40 days. I had a 45-day contract. 40 days, it was against me. Finally, day 41, it starts coming back. It's right at my break-even number. Day 42, it's in profit. Day 43, I'm at 50% return. Right? And it only moved up 50 cents. It was just barely above or out of the money, and that was up 50%. So it happens like that. It's just, like I said, you got to make sure that you get in relatively at the right time, and you have to make sure you do the right direction. Because if it goes in the wrong direction and you choose the wrong direction and it goes in the wrong direction, it's hard to get out of that. You're not gonna probably just gonna take a loss on it. So does that help?
I got the credit spread. So like if I want to search more about the calendar, what should I type in? Just like calendar calls?
Maybe type selling calendars, something like that. The way I do it, it's going to be different. I don't think everybody, there's not a lot of videos out there that do it the way I do it. A lot of people do front month and back month. So like December and January, that's how they do calendars. I like to do calendars on leaps because I can basically take in premium the whole time, and it's going to cover my theta loss plus some. And at some point, it's going to cross into in the money, and then I'm going to take the profit I was looking for. So I'm going to be taking in premiums the whole time, plus I'm going to take in the profit of the strikes that I chose. So let's say, for example, let's use Amazon since we were talking about that. I think it was $45,000, and I would get around $4,000 to $5,000 each time, right? Each front month contract I sell. And let's say I do that 4 times and I get 20 grand. And then finally, the stock goes into the strike that I chose. And now I'm up on that leap, right? So that leap is now, let's say $2,000 up. I sell that position, I get all of my money back plus 2,000, plus all those contracts that I sold and made 20,000. Right? So I made actually $22,000. So that's why I like doing leaps with calendars. a lot, like I said, a lot of people they'll just do front month and back month, and they'll make $100 or something. You know, that's stupid to me. It's a waste of time, waste of money. There's a lot of risk. There's a lot less risk. You give yourself a lot of time with the leap. You sell contracts against it. You cover the theta loss, and at some point, if as long as you chose the right strike, you're going to see profits. It's going to hit your strike. You're gonna sell that for a profit. You're going to take your money out, and everything that you got paid prior to that is all profit. It's a beautiful strategy, but you got to have money.
Would you mind to make a video whenever you get a chance, like in future,
Yeah,
explaining this strategy in the detail?
yeah. I was
Because I'm
planning
pretty
on
much
it.
interested with this.
Sorry, go ahead.
So, like, I'm pretty much interested in this strategy. Like, it seems less risky than the straight, buying calls and like selling calls. And, I'm interested to invest the money. Like, I do have a, nice portfolio that I can put the money in and use this strategy. But the thing is, like, I want to know 100% before I jump in. So I don't want to invest anything which I don't know.
You have
Like, if we can
Thinkorswim?
make a really nice video. I have Webull.
I don't think you can do it on Webull. I think you can only do it on. I'm sure there's other platforms, but I don't think you can do spread type strategies on Webull. So
I
you're
can
gonna
go
have to get
to
on Thinkorswim.
Thinkorswim because anyways I'm planning to move from cash to margin in Webull. So instead of going to margin, I can just switch it to Thinkorswim from the Webull.
Yeah, I mean, and it'll be easier for you to learn because I'll have videos on it, so you'll be able to reference the videos and directly relate to the platform.
Oh, you
And
already made the video on it?
no, not yet. So I mean, I'm planning on making videos. I have a list, right? I've got a list of videos that I'm planning on making. Like, here's an example. Like, I wanted to do chart patterns. I wanted to do stop loss, trail and stop loss, OCO orders, and then I wanted to do credit spreads, debit spreads, iron condors, iron butterflies, straddles, strangles, calendars, and diagonals. Right. Those are all the strategies that I wanted to make videos on. It's just a matter of finding the time and whatever to do it. But credit spreads and calendars are going to be the first two probably that I do. So because I think they're the safest strategies. The rest of them are risky. Iron condors are pretty risky in my opinion, even though it's a neutral trade. It's still risky because if it breaches one of your legs, then you're broken. Iron butterflies are Iron butterfly is a calendar in a sense, but it's with credit spreads. So iron butterfly is 2 credit spreads, but the short strikes are sharing the same strike like a calendar does. So, that one's you'll understand it. I mean, if I make a calendar video and you get that, you'll understand iron butterfly.
Yeah, please do that. Like, I'm really, when you explained today, this Amazon, like, I think you gave a couple of example of Tesla, Netflix, and Amazon, and it seems less risky than other options. So like I'm pretty much interested to do this, and simultaneously I'm learning other strategy as well, rather than jumping in the options where I'm not have 100% knowledge like what I'm doing, and I'm not really interested to invest in something which I don't know.
Right. Yeah, no, I definitely will. It's on the list to do. Um,
Cool, man.
I'll
That
make
would be
credit
helpful.
spreads first,
Really helpful.
but then I'll do calendars. That was the plan. So definitely gonna do it. Just give me a little bit of time, and I'll see if I can't get it
Yeah,
done.
yeah. Take your time. Anyways, I have to move from Webull to Thinkorswim. So yeah, after a month even would be fine because all my investment is right now in the stocks, and I'm not really doing options. Do like probably around 1,000 or 2,000 of my total portfolio just investing options like Tilio calls, which I like. Not really doing options.
I got you. Well, I plan on having videos once a week at minimum. I mean, I'm trying to. The goal is to get people to subscribe and like the videos so that I can get more people to learn. Because
I
the
will
more
do that.
people that learn, the better the world is. The better the world is when everybody is making money. Instead of these rich bastards making millions by themselves, let's all make millions together. We can all do it together. So
Yeah,
that's
we
what I'm
will do
after.
it. I would share for sure. we got a whole big group here.
Yeah, I mean,
We are growing, man. We are growing.
for sure. I mean, not everybody that watches the videos subscribes and likes. I mean, that's obvious, right? That's just how it goes with YouTube. And I'm not interested in making money off of YouTube. I mean, the the requirements are actually pretty freaking high. So when I initially, when I started doing videos, I just did it because I don't want to keep teaching the same thing over and over and over. Right? I've been doing that for months now, and I'm like, you know what? I gotta change this. I gotta make it so that instead of me having to teach the same thing to different people over and over, let me just revert them to a video that will teach them exactly how I would. So that's what I started doing it. And then once I created my videos, then I looked at the monetize tab, and I'm like, oh, huh, that's right, you can get paid doing this. Then I looked at it, I'm like, Jesus, there's no way I'm gonna get that much people. So all right, I'm not gonna bother with it, you know. So my main goal here is just create educational videos, so I really don't have to teach the same thing over and over and over and over. That's the main reason why I did it. So
But
How's
go ahead, Richard.
how's I tag you into a screenshot I took in the lobby on the Robinhood and Webull for the Visa contract. If you can go onto lobby real quick, it's the first picture when you open up. If you can see on Robinhood, there's a huge spike in the Visa contract that my friend is in. She's in the same contract as me, but on her around 345, her contract spiked so much and it went back down. But on mine, on my Weibo and on Thinkorswim, around that time there's no movement. So after 2:30 on Weibo and on Thinkorswim, the Visa contract has no movement at all. So it just stayed at 56 cents for like the until the market closed. So do you know why that is?
Because Robinhood's shit. the only thing I got for you.
Is it because it's a glitch? It's not real.
It could
Didn't
be,
really
yeah.
go.
It could be a glitch for sure. I mean, Robinhood is known to have glitches. Have
So
your friend watch my Robinhood video.
I think I
She right?
sent it to her. Yeah.
She needs to watch that video so she can understand why she needs to get off of Robinhood.
Yeah, that's what I mean. I was like, this is a glitch probably. She was like, no, no, you can see it in the share price. I was like, the share went up like 2 cents. What are you talking about? Like, there's no way the contract is gonna spike that much because the share didn't move at all. It's a glitch. That's what I was saying. Like, it must be a glitch then. Like, do you think there's such thing as common that I don't think it's possible the contract just suddenly spike like couple 100% and goes back down in like a second, right? Like, I don't think that's really
Nah,
possible.
nah. I mean, implied volatility could have moved, but to spike like that's too drastic. IV is not going to just pump and then dump real quick. It doesn't work that way. And it'd have to pump. I mean, let me take a look in here and see. I mean, I don't even know how much of a percent jump that is. That seems like a lot. So
Yeah, that's what I was like, man, this is not real. This is a glitch for sure. Cause I
yeah,
was watching the contract like for the last 30 minutes before the market closed. I didn't see any spike in my contract at all.
yeah, Robinhood's ass,
I know
donkey ass.
I gotta show her the video because I quit Robinhood a long time ago. I don't like Robinhood at all. I don't know why people use it still.
Well, I mean, I guess people are comfortable with it, right? I mean, a lot of folks may not have encountered the problems that I've seen throughout the past year. I mean, but if she watches that video, maybe some of that stuff might dawn on her and say, you know what, that has happened to me. She might not realize that it's because Robinhood is shit. She might have just didn't even recognize it. But when she watches the video, she might become cognizant of the fact that it did happen, and then my video is gonna basically help her understand that and be conscious of it. So
That's what I'm gonna do that right now. I'm gonna show her your video because I think Robinhood is trash. Also, I mean, I know people use it. Like some people make money off of it, but you like tech analysis and all that stuff, you can't even have it on Robinhood unless you're
yeah,
trading on Robinhood and doing technical analysis on Thinkorswim. But that's like a different case.
yeah. I mean, people do that, but still, like I just don't understand why people want to keep using Robinhood when it does weird glitchy stuff. And I guarantee you there's some shady shit going on with Robinhood on the back end. I mean, I've heard of people saying that Robinhood actually, their theory is, so my theory, first of all, is Robinhood is a low end broker that the exchange markets don't pay attention to until there's no one else from Thinkorswim or Schwab or E-Trade or Fidelity that has open orders. Then they go to Robinhood and say, all right, now we'll take your order. Whereas some other people seem to think that Robinhood delays stuff. So how do they explain it to me that the contract price will go up, you go to sell it, it actually sells it, but doesn't sell it on your account until it falls, and then it sells it, and it skims off the top of your contract. I don't know which theory is right, but something is off. That I do know.
Yeah, I mean, I think all of these companies have like background manipulation and stuff. It just,
Oh yeah, yeah.
I don't know. Maybe Robinhood is a little more obvious, but I'm sure Weibo does that also. Weibo all like, a lot of times when there's a lot of traffic going on, Weibo just froze. Like it wouldn't let you do anything.
Yeah, I don't know, man. Robinhood is definitely sketch.
Yeah.
The rest of them, I mean, they're upfront about some of the stuff, right? They charge fees. Like Thinkorswim, you're gonna pay a contract fee no matter what. So um, ask yourself this: why do you get free contract fees or no contract fees in Webull and Robinhood, but you pay fees in Thinkorswim? Let me know if you ever find the answer to that.
You pay fees on Thinkorswim?
Yeah, 65 cents a contract.
Uh, 65 cents per contract?
Yes.
Oh, per contract. Okay, all right.
Yeah, and that's in and out, so it's $1.30 to buy and
So if I
sell
buy
an option.
if I buy $18 worth of same day SPY contract, I have to pay like $1 extra, basically.
You'll pay 65 cents, and then when you get out, you'll pay 65 cents.
Oh wow.
Yeah. Imagine doing credit spreads. It's $1.30 times 2. And if a
Well, I just
15% return is $5 or $10, there goes your premium, right?
well, it's just a couple dollars. I think I can handle that. Yeah.
Yeah, I mean,
Yeah, that means
I'm
it's
with you.
better than
Yeah, I
not being
mean,
able
it's
to
a
sell
couple
your
dollars.
contract. Yeah.
Yeah, it's
Better that than to not your your broker not letting you sell your contracts when it's like up a lot.
right, right. No,
Yeah.
100%. That's why I like Thinkorswim because I mean, I'm happy to pay the fee. I mean, they actually decreased mine down to 55 cents. But, you know, it's like um, I'm happy to pay the fee because, you know, I can get in and out of a position fast, like in the blink of an eye, especially if I've got open interest. It does not take any time whatsoever to get out of a position.
I've traded on
Yeah.
Robinhood and Webull, and I can definitely tell the difference in order fills.
Oh yeah, it's definitely night and day, 100%.
Usually, when I'm on Robinhood, I'll put in the like the bid or the ask lower than what it's at, just so it'll fill quicker, because it won't fill right away all the time.
Right. Yeah. I mean, that's the thing too. There's a way to make it so that you can fill quicker, right? I mean, you lower it a little bit. You never want to do market though. Never ever do market. Not unless it's like flying up and you think it's going to drop any second now and it's flying up. Market sell, market sell.
Yo, Hostel, I got a question about tomorrow.
Okay.
I know it's quadruple witching hour. You expect it to be extremely volatile.
Yeah, could be. Premiums should be pretty good on some stuff.
I mean, I'm thinking it's a good scalping opportunity, but it can also be maybe sketchy at the same time.
Yeah, I mean, I haven't had a lot of experience with quadruple witching. The only thing that I can tell you is volatility does go up. That I do know. Right? And people want to exit their contracts. So you're going to get a lot of selling positions. There's going to be some exercising going on. There's going to be some assignment going on. So I guess keep that in mind. Is tomorrow quadruple witching? It's normally on a month contract.
It's supposed to be the third Friday of December, but I don't think it's the third Friday.
Yeah, it has to be. Because it's on a month contract. Month contracts are the ones that typically have quadruple witching.
Pretty sure it's tomorrow. I'm gonna have to look it up. I thought it was tomorrow.
I mean, it could be. I mean, I'm not disputing what you're saying. I'm just used to them being on monthly contracts, but because weeklies are weeklies, right? I mean, monthlies are the ones that have the boatload of open interest. So those are the ones that typically have the quadruple witching. Like if I look at December 18th.
Yeah, I think it might be next Friday. Maybe it's not tomorrow.
I mean, look at all these contracts on December 18th for Apple. Thousands. I don't know if I'd go as far as say hundreds of thousands, but maybe 1 million on this one expiration date. Then you look at tomorrow. there's a lot, but it's not like December 18th. December 18th is triple or 6-digit numbers. Easy. I mean, there's
Sorry to cut you off, hostile, but yeah, quadruple witching is the third Friday of every month of every quarter. So third Friday of March, June, September, and December.
Yep. Okay. And so that would be the 18th then.
Okay, good.
Yeah, but
I was
look at the OI here, man. Just 2 strikes have 300,000 almost. And then you look
I,
at the other side. I mean, there's thousands.
I remember the last witching we had. It was literally like top of the chart all the way to the bottom, like back and forth. It was pretty crazy.
Oh yeah. But that's the thing is, you get in at the wrong point, it's gonna be painful. It's gonna be bloody potentially.
Exactly.
I mean, you could do straddles or strangles and get it at both ends. Like if you can get in right at the middle, you can play both sides and make money on both ends. That's always a strategy.
I guess so. I'd be worried about burning those premiums.
Well, that's a same day strategy. Like you get in and out today. Do not
Yeah.
hold it no matter what. You get out. And you typically want to get something that's a week out. I mean, you could get same day expiration, but man, you're really
Oh yeah.
trying to play scary games, right? I guess same day stuff doesn't cost as much, right? I could do Apple calls and puts for right at $100, just a little more, so $110, and I bet you I could play both ends. Maybe I'll do that next week just for fun. See what happens.
I mean, it's definitely possible.
Don't do Tesla though.
No.
Stay away from that.
I'm really curious to see if it's going to break that 125 anytime soon.
I think it'll test it. It's going to continue testing it until they release their iPhone 12 data revenue. However many phones they've sold. Supposedly it's going to be big. I keep hearing that. If it
When's
is
it?
big, then oof, it'll go to 150 in my opinion.
When's that come out?
I don't know. I'm told that it could be earnings, which would be in January. But I just feel like that's too far ahead from, because right now the price is continuously testing. It's been pretty consistent with testing, between 120 and 125, 126. Its resistance level is 127, so I foresee it in the near future. It's going to test that 127. I think it's going to keep kind of bouncing off of it until then. It might even breach it. To be honest with you, Apple's bullish in my opinion. I don't see any reason for them not to be.
Oh yeah, I think it's easy. Right now it's easy to get calls at 121 level.
Yeah. So,
which I don't know if they'll hit it again. It kind of just touched it yesterday because of the market dump, but
who
now it's
knows?
kind of around with 123 again.
Yeah, and it's consolidating. If you look at my screen, it's definitely consolidating. The volume, not volume, the candles are shrinking. Although the volume consolidated all the way until, is that market close? Oh, the last hour, or I'm sorry, the last 15 minutes of the market for Apple I believe you can trade to 4:15 p.m. So that's what that looks like. So there's a big drop, or a lot of red volume rather. So I mean, but it consolidated from open all the way to end of close, except for that last 15 minutes, and then went sideways again. So, did you have any more questions, Karate?
No, I think that's good. You wouldn't recommend buying shares right now, would you?
Nah, I think it's too high. I mean,
Yeah.
honestly, it's too late. If you're
Yeah.
getting, I mean, I'll be honest. I mean, my mom has shares at 124, so she got a little. She started chasing. I mean, I told her to buy shares at 110, 105, 110, and her money didn't make it into her account in time, and then it pumped up to 124, so she bought it, and then it dumped back down to 110. I'm like, told you not to, but she's stuck at 124. So, and she's got 30 shares.
Well, hopefully she'll get that going soon.
Yeah, it'll take a little time, but it's all right.
Any idea about
Go ahead.
PFE?
PFE, Pfizer.
Yes, sir.
Well, they did have their announcement today, I think.
Yeah, they went dollar
FDA
after hours,
approved.
I think.
I expect them to keep pumping. It's going to test that high for sure. We could see some exponential movement on Pfizer, maybe. IV is already pretty high though, so I'd be a little nervous, a little bit. I think it'll keep going though, but I don't really know. Just based off of their FDA approval of their vaccine, you know, that should be a positive thing.
What do you think about somebody that has some options? How do you think we can handle this situation for tomorrow? If you would have options,
Um, I mean, I'd be looking for an exit, to be honest. How many contracts do you have?
8.
Oh yeah, I'd totally be looking for an exit on some of it. Are you up right now on them?
Yes.
Okay, what percent are you up on them?
I think it's like, I mean, right now it went up just $1. I honestly don't know what's my percentage right now, but
It
I
can't be
bought them.
much.
Yeah, I bought them when they were like, I think it was 41.60 something. But my question is, in reality, like you you exit uh when the market started, and the at open, or you keep it for a little bit.
What's their expiration?
24, 20, 24 December.
December 24th? This month, 24th?
Yes, sir.
Okay. When did you buy it?
Today.
Okay. So I'd say the first two contracts that I got with 10% return, and then take 5% more every two contracts. So for example, you got 8 contracts. First two, you take 10% profits. Second two, you take 15%. Third two, you take 20%, and so on. And maybe let the last two run. That's how I would do it. I would definitely, 10% on how much did your contract cost?
Uh, each it was like almost two something.
200, almost 300.
Yeah, they are not expensive.
Okay, so let's just say 300. Um, that's $30 for two. 300 times 15. And then the next two would be 45. Next two would be 60. And the next two would be 75. But again, you could let the last two run. So if it's pumping, I mean, let's be honest. If tomorrow morning opens and it rips past 43.51, definitely unload two, maybe three or four, and then let the last four run. As it, and you pay attention to volume as the green volume slows down, you start letting some contracts go. All right, so the green is gonna, let's just assume for a sec that the market opens tomorrow and it starts ripping. At some point, the green volume candles are going to start shrinking. As they start shrinking, that's when you start letting some of them contracts go, if not all of them. That's what I would do. Don't hold it very long. If you can, I mean, if you're seeing 50% profit before you're even able to get out of any contracts, you're going to see 100% or 150 or maybe 200% at that point. I'm just not really sure though. I mean, just remember, create a plan or a goal and follow it. Pay attention to the volume candles, which is down here. You looking at my screen?
I can see that. Yeah. So
Okay, so this here, you want to see what you want to see tomorrow is a big green one like this, and continuation, obviously. But if it starts to shrink and they start to do this, I would probably. So let's just say for a second, trying to find some candles that may. No. Let's just say for a second, it just kind of does this number, right? I'd say each one of these, sell one, sell one, sell one, sell one, sell one, right? Until that green starts to shrink. I mean, until you're out of contracts, because basically you want to ride it all the way up, right? So let me go. What chart time frames do you use? Do you use 5-day, 15-minute, or what?
no clue, man.
No clue. Okay. I would recommend 5-day, 15-minute charts. And okay, so you see this right here? Let's assume for a second that these red candles are green. I'd sell my first contract here, another one here, another one on the third one, and so on until I'd say, get to like 4 or 5, and then you start letting pretty much all of them go except for maybe one, something like that. Never ever test the market on trying to squeeze as much as you can out of a contract because it will be taken back. Make sense?
Yes. So check that. You were saying that check that volume.
Yeah, I mean, if you're seeing a big rip tomorrow morning when the market opens, you can probably wait till the second or third candle, but you better start letting some go. And like I said, you can probably hold a couple. If you can, if they cost you $300 and you can sell 6 of them or less for how do I say it? So if you can exit your contracts to the point where you can get some for free, which means you've made enough profit off of 4 of them. So let's say you've made what, $1,200 off of 4. Now you got 4 that are free. You can let them ride, and I would shave them slowly, one at a time. Shave one. Let's say you're up. That's 100% return, right? If you make $1,200 and you've got 8 of them, and you can sell 4 of them for $1,200 total, then you've got 4 left that are riding for free. And at that point, I would say shave one on the next green candle up, maybe shave another one on the next green candle up. Kind of do something like that. Play it by ear. But at that point, if you can get stuff for free, then you're in a good position. But I mean, I guarantee you when market opens tomorrow, if it's anywhere near this $43, $42.84 level, you're in profit. Because if you said you're only up $1 right now, you're going to be up for sure when the market opens. You might be up 15%.
It's freeze right now. Like it's stuck in $1. I don't know what happened.
Well, I mean, it's
Both,
because the market
even
closed. This
even
movement after hours, you're not going to see that on your option. You have to wait till the market opens.
no, yeah. I checked them on Yahoo Finance, and I have only one contract of the BioNTech. Only have one there.
Okay. All right. Well, does that answer your questions?
Yes.
Okay.
Thank you.
Okay. You're welcome. All right. Does anybody else have any questions?
I just got a
What's your
quick question. What do you think about the stock? Its ticker is YALA.
It's new. Not too much to think. It came out in October. I don't know anything about that. It's new. There's not a lot to say, unfortunately.
Okay.
Yeah, I mean, I can't really say too much about it, unfortunately. I mean, it's just so new. There's not a lot of data for me to parse.
Okay.
Hi, I've got a question on watch lists.
Okay.
Hello?
Okay, go ahead.
Yep. Just want to know, how do you create your day trading watch list? Is there a screener that you use, or yeah,
No.
some sort of...
My watch list is built over many years of trading. I do use scanners, but my scanners aren't. Mine are like standard deviation channel scanners. I use some of the ones that come on here, like where is it at? Russell 1000, 2000, 3000 indices.
So I'm actually pretty new to this channel. Is there one that is being shared in one of the tabs, or is there one that I can use
Um,
currently, or?
Not really. I mean, what platform are you using first?
I'm on Thinkorswim.
So, if you go to my channel, I mean, I built a, YouTube video explaining a standard deviation scanner.
Okay.
You can check that out. Watch. So there's 2 videos, I think. Let me hold on. Let's see.
And it explains the rationale for applying the filters as well, does it? Or I'll check it out.
Yes, it does. Let me just
Okay.
find it. All right, so look on my channel. It's Professor Hostel, and you'll see 2 videos. One says standard deviation channels that explains what standard deviation channels are, and then there's another one. So that one was posted on 11:30, and then there's
11.
another one that is for the scanner itself, which was posted on 12:06, and it's called standard deviation channel scanner. So you need to understand what the standard deviation channels are, and then you can understand how I set up the scanner and what it does.
Okay. Thanks. I'll check it out.
You're
Thanks.
welcome.
I have a question.
Okay.
What's your thoughts on SPY for the next for like a 12/4 expiration
SPY
or 12/14 expiration
for the SPY?
370 call?
Honestly, I'm not, I'm not totally sure. I mean, I think we're in a bullish month. December's bullish, so I mean, I would think that SPY is going to keep going up for at least another 3 weeks or so. It's going
Yeah.
to slowly trend up. You're going to have a couple of days here and there where it does a
dip.
little bit of red. Yeah, I mean, we've had them past 2, maybe 3 days. So maybe we'll start to see it go back up now. But I think the market's bullish. Everything's hitting highs. At some point, though, it will correct, and I think that time frame is going to be January 15th to the 20th, sometime around there.
Okay.
Unless Trump wins some of these court battles and one of the states throws electors his way.
Yeah,
that could be.
I just done like a little lotto or like a lotto play. Just got in today for a 12/14, a 370 call. So I was just going off vaccine news. That's what I was playing it on.
I see.
Yeah.
You said the what? Which one? 370?
Uh-huh.
I mean, it might pay. It might pay.
Yeah.
I mean, it's only $60. Is that what you paid for it?
Yeah. I paid 70. So
I see.
I'm red right now. Yeah.
Well, you might get a chance tomorrow, especially with Pfizer or Pfizer, whatever.
Yep.
Well, I hope you're successful. I hope everybody here is successful with their plays tomorrow.
All right. Well, thanks.
You're welcome. Okay, anybody else before I go?
I have a question, Hostile.
Okay.
It's kind of more like kind of looking for advice on what would you do. So back in March, before the whole coronavirus thing happened, I decided to sell my car to start investing because I just started getting the idea of putting it into dividend stocks, right, to get some passive income. And I remember that I think you said once that that's how you started. You poured like most of your money into dividend stocks, and that's kind of like what I did. And so I'm just wondering, I'm pretty big on that account. I just poured like the money that I had. I just poured it into like a whole bunch of dividend stocks, and it's been pretty good up so far. I think I'm up to like 15% on that account. and I was just wondering, do you think I should like take that money out and start flipping shares with that money?
Yes,
Yes.
definitely.
Okay. Yeah, because like I'm up good and like and I'm just kind of like wondering because I know I was more past like before I did that I wasn't in the group in the Discord, but then I started like hearing your lectures, like how you say that you started out in the same position as me, and then you started making more consistent but safe consistent gains like by flipping shares. So I was just wondering like maybe I should start doing that as well. It's safe and then I think it's a good strategy as well.
Yeah, definitely. I mean, as long as you can read support and resistance well, and you make the right choices and when to get into something, and
Yeah.
you don't buy crappy stocks, you'll win every time. You just gotta have
Yeah,
patience.
that's the other thing. Like what advice would you give like to find like good stocks to invest in? Like should I just like look for stocks that like for companies that are good and like that are financially or
Yeah, I mean, solvent companies, companies that aren't going to go out of business, companies that have been around for a while, companies with a little bit of volatility, very well-known companies. Um, uh, it's hard to say how to find them because there's
yeah.
so many ways, but just start looking out there. I mean, things off the top of your head, like what's something that just comes in off the top of your head. Start there, right? Like for me, AMD, Apple, Intel. Well, I
Yeah.
wouldn't do
Uh-huh.
Intel. Stay away from Intel. Um,
Okay.
but AMD, Apple, Netflix, Tesla, Altria. Um, what else? Shit. Let me look at my chart. um, I mean, here's some of the stuff that I normally like to trade. Citigroup, CSIQ, Exelon, Juniper, Lockheed Martin, Altria, Moderna, Pets, Rocket Mortgage, Rackspace, Siemens, Uber, Workhorse. Um, those are just a few of the ones that I really like to trade. I trade all of these before. I've traded Citi multiple times. I've traded Exelon multiple times. Same thing with Juniper, LMT, MO, Netflix, Pets, Rocket. Those I've traded many times. Uber I've traded quite a few times. But everything here I've traded once or twice at least. All of
Okay.
them I've made money.
And so do you think like a good strategy would then be buying when it hits support and then selling when it hits the resistance?
Yes, that's how I do it.
Yeah. Okay. And what time frames do you look at? Do you look at the daily or like the
No,
4 hour? No.
I look at so I mean I start at 30-day 1 hour. I go out to 60-day 1 hour. Then I go out to 90-day 2 hour, and then I'll go out to 180-day 4 hour. I mean I'm looking for specific key levels, support levels, and the 180 is going to show me the strongest ones. I mean you could go to
Okay.
1 year 1 day, but it kind of gets convoluted between there and the 180. So I like the 180 a lot. It's one of my favorites to trade off of.
Okay. Okay. I think I'm gonna start getting into that then. Maybe sooner or later. I'm gonna probably take out that money that I have because I have it in because I just since my plan was just to hold it I guess forever in there like before I joined the Discord. I put it into I don't know if you heard of M1 Finance. The
I haven't, no.
No? Oh, well, in that one, it's kind of more like of a broker where you just hold it like there because you can't really like day trade it or take it out quick. But I think I'm gonna start trying to take it out. But do you think like because in my account I have like around 10K. Do you think that's a good amount to start flipping?
Yeah, for sure. Um,
Yeah.
I started with $700, so 10 grand's a great start.
Okay. Yeah, cause I mean I'm pretty sure I could like do some calls or something, but I just don't want to like blow my account like how I've seen some people do it, and I just don't want to do that.
Yeah, no, I mean, it sounds like I mean, you're starting out with long-term dividend stuff where you want some kind of somewhat of a passive income. Swing trading shares are going to be um, what's the difference between I'm trying to figure out what's the word that's in between aggressive and passive. Whatever's in the
Like
middle.
moderate.
Yeah, I mean, moderate. Yeah, I mean, I guess um, that's what swing trading is. Um, but you're guaranteed to never lose until you decide to lose. Like it's your choice to lose. You can bag hold forever. I mean, I've bag held something for 10 years before, and then finally this year I was able to take profits on it. So um, just because something goes down doesn't mean it's out.
Yeah.
But you know, watch my I got some support and resistance videos. Watch those. Watch the trend 50% and 50% retracement and Fibonacci video. That'll help, and then you should be somewhat prepared to start getting into something, right? I mean, you can even look at my standard deviation videos and channels, both videos that I was mentioning to the gentleman earlier that was asking about it. Um, you know, those will help you find stuff. Um, and I plan on making more videos, especially for scanners. I wanted to do chart pattern scanners, um, but I need to create my watch list for those before I can start on that. But you know, there's a lot of ways to go about it. Just um, as long as you can determine support, resistance, and trend, you will be successful 100%. That's where I got my success started. The rest of it's
Okay. Yeah.
just watching stocks on a religious basis, knowing when they're going to start pumping and when they're going to start dumping.
Okay. Yeah, cause I mean right now I'm like I don't want to like kind of have that mindset of becoming rich like overnight, cause I know that's gonna end up burning me. And like how you told someone earlier, like I know like cause right now I'm 21, so I'm trying to like grow it like steady. I just don't want to rush it, cause I don't want to end up regretting something like at the end of the day, like ending up with nothing.
Right.
So that's why I started thinking about shares, like how you keep saying like I think you should start off with shares, like if you're just starting out, like not jump into options that quick. I mean maybe an option play like here and there, but I think that's what I want to do, like just focus mainly on like flipping shares.
Well, it's an amazing strategy. It's solid. It's very safe. I mean, you can't go wrong with it. I mean, like I said, I haven't lost, right? I've probably done 100 trades, 200 trades this year. I have not lost a single one when it comes to share swings. Yeah, maybe I broke even on some just because I was tired of sitting on something. Maybe I only made $10 or $15 on some. Some I made 50, 100. Some I made 150, 200, 300, 400. Some I'm up, 10,000. It just depends, right?
Yeah.
Not everything's gonna print the way you want. I mean, hell, 75% of the stuff that I got out of for small profits, they all went up a hell of a lot more than what I got out at. So I could have made even more, right? It's just, wasn't patient enough. Like Moderna, exactly a perfect example. I mean, I got out at $87. I made $400. I made 21% return on that, and then it went to 170. So I could have made a few grand probably.
Yeah.
So had I held that for another 2 weeks, I mean, it would have been huge. it is what it is. I made money nonetheless, and it was good. $400 return is great. I'm happy with that. So I don't look back and be like, damn it, I should have held it. No, I look back and say, I made $400 off of 1900. Like that's a solid return. So yeah, I mean, don't trade options. Just do shares. I mean, I'll be honest with you. The more money you have, the less you'll want to trade options. Options is for people that frankly don't have much money and want to turn money big quick. It's also for people that excuse me. It's also for people that have a few $1,000,000 and they're willing to throw 10 grand at something, and if they lose it, so what?
Yeah.
Because if they throw 10 grand at something and then it turns out to be 100% gainer, or like let's say they gamble with Tesla and I'll throw 20,000 at Tesla. If I've got $1 million or $2 million, 10 or 20,000 at Tesla is chump change to me. And if it hits and I get 3 or 4 or 500% return, we're talking $100,000 just like that. But it's for people like that, or it's for people that want to make money quick and don't have a lot. They want to turn $100 into 10,000. They want to turn 1,000 into 20,000. A lot of times that's a big mistake. Most of the time, I would argue that all of the time that's a mistake.
Yeah.
Tilio is a very methodical trader, and he can have like very consistent returns every single day. He has a strategy. He's got skills. He trades decent sized amounts too. Like he'll trade 5 grand here, 7 grand there. So he's built up his account. Most people have not built up their account and they're trying to trade like him. That's a mistake. So I recommend you get a Roth account. I mean, like I was.
I have a Roth account too.
Oh, is that what you're in?
I have a Roth and a dividend account.
Just take everything out and put it in your Roth. Max that thing.
In my Roth?
Yeah, max it out.
Okay.
Max it out. Because if you're 21, you've got 20 years, no, 30 years before you're 59 and a half. So you got 30 years to turn that money into something huge.
Yeah, I think I have like 3 accounts. I have the dividend one, which is like the one that has like 10K in it. My Roth one, I opened it a little bit later. I had some spare cash, so I put in like 3K in there. And then I have another one. It's kind of like I guess you could call like a fund portfolio where I just put like some growth stocks in there. And that one gained like the most. I think I'm up 80% on that one. So maybe I should just take it all out and put it into the Roth IRA.
Yeah. I mean, you can only do 6,000 a year in the Roth. So you got
Oh,
another
okay.
3,000 for this year, but then January 1st you can put another 6. So I'd definitely do that. And then that's where you need to really be trading your shares. I mean, you trade shares everywhere, but that's where you should concentrate all of your money. So every year, put 6 grand into that, and at some point you want to transition all of your money out into the Roth. I mean, unless you're just consistently making a ton of money in the other accounts, keep doing that. I mean, I've got multiple accounts as well. I've got a traditional IRA. I got 2 Roth accounts, one for me and my wife, and then I've got a margin account. And when I can't max out my Roth anymore, then I'll just continue building those accounts.
Yeah.
And honestly, if I can build them so fast to where I've got 12,000 a year that I can take out and I still got a lot of money in them other accounts, that's great. That's even better, right?
Yeah.
But the beauty of the Roth is you pay no tax. When you're 60 or 59 and a half and you've got, say, $10 million in there or something, some crazy number, the government can't touch it. Can't touch a dime. It's all yours.
So once you take it out, like whatever you have in there, there's nothing deducted, nothing. It's
Nope.
just yours.
It's all yours. You don't pay any tax as long as you wait till you're 59 and a half. And
Yeah.
you can withdraw contributions anytime. So if you put $6,000 this year, $6,000 next year, and you make 12,000, so you're at 24 grand in your account total, you can withdraw 12,000 without any penalty whatsoever. But you can't put it back.
Yeah.
It's highly advisable to leave it in there, especially at a young age. Because at some point, you're going to make so much money swinging shares that you could probably pull out, all of your contribution, and that it'd be peanuts compared to what you've got in there.
How can you start up a Roth account?
Just go to any broker. I use Schwab, but you can use TD Ameritrade. You can use Webull, and just open an account, a retirement account, and make sure it says Roth. That's it. Just like any other
all right.
trading account.
I got you. All right. I'll have to check that out.
Prevent the government
So
from taking your money.
that's the goal right there. So I was gonna say, so when swinging shares, what do you have like a percentage that you aim to gain, like in a year, like when you're swinging shares
5% of your total account value every month.
every month? Okay.
If you can exceed that, amazing. If not, well, you tried. But here's the thing. A minimum of 2.5% return on your total account every month. That is very reasonable and realistic. I mean, if you think about it, like you got 10 grand. Let's see here, $10,000 times 2.5%. That's $250. That's very easy with 10 grand.
Yeah.
If let's just say you put 10 grand in one stock, you could get $250 in one day. I can guarantee you that. You get the right stock and it moves just 2.5%. There goes your money. You're good for the month. Or it could pump 5%. You could have one of those. It happens. I mean, there's times like I've always exceeded the 5% number every month. Sometimes I'll be at 5, some will be 7, some will be 9. This month because of Tesla, I'm up huge. Like there's just a lot of, you don't have to get the 5% every month. If you get one month that's 30% and the last two were 3, you get what I'm saying? Like now that's 36% in 3 months, not 15, which was the goal.
Yeah.
So there are times where you'll get that. You'll be lucky enough. And I don't even necessarily want to say luck. I want to say you'll be skillful enough to make more than 5% in 1 month, and it covers any of those other months that may not have been 5%. So that's the goal.
Okay. Yeah, that sounds good. I think I'm a aim for that, like 5% every month.
Yeah, I mean it's very, very
Um,
doable. Very doable.
yeah.
That's 60% return a year on your account. So if you got 10 grand, that's $6,000 you would make in 1 year. And that's not compounding that number. So what I'm talking about though is compounding. So here, I'll do the math real quick, just for 1 year, so
All
you can
right.
get an idea. Bear with me. I'm just going to do 6,000, not 10,000, because we're talking about a Roth here. So It's gonna take me a sec because I gotta do this multiple times here. 50. Times I'm on month 4, just FYI. Ooh. Imagine I've done this for 30 years, a 30-year uh, estimate on 5% return, and I'm only on month 8, and I'm only doing 2.5%, just so you know.
Yeah. So in 1 year, 2.5% return every month off of $6,000 starting in January. By December, it'll be $8,069. That's just 2.5% return. Wow, that's just on 2.5. That's crazy.
Yeah, just 2.5. So I mean, spend some time and do it for. I mean, imagine that's just 1 year. Next year, you put 6,000 in, right? So think about this for you. I'm just gonna do January of the following year. So you're at $8,069.31. If I put in $6,000 plus 8,069.31 times 2.5%, that's $351 in profit. That's so easy. It's so easy to do with $14,000. You know what I mean? Like stupid easy. All right, now
Yeah.
imagine for a sec. 14,069.31. 5% is $703. Still easy.
Yeah.
I mean, one trade I made $400, and then there were 3 other trades that I made 120, 175, 220, 90, 180, 75, 115. I mean, my account's larger though. I mean, I got $60,000, but just stuff like that, you know,
Yeah.
it's so
Yeah. I think
so easy to
that's
do.
kind of what.
And it's going
Yeah.
to
I think
pay
that's.
you a lot more money than those silly dividends. I mean,
Yeah.
it's garbage. Dividends are
Yeah.
garbage.
I only made like from dividends. I think I'm up only $100. I think.
Yeah, it's
Yeah.
trash. Dividends are good if you got like 50 million in there. Then you're making a few 100,000.
Yeah.
And you can just chill. You don't have to do nothing. Kick your feet up.
Yeah. I think it's because like when I joined the Discord, I kind of changed my perspective more. Like, cause I like I said before, I was more thinking of being like a passive investor, like just leaving it in there. But I know it's not really gonna do me any good. Like, I mean, it will, but like I know I have like it has more potential, basically,
Yeah,
to do better.
absolutely. Absolutely.
Yeah. So yeah, I think I'm gonna start looking into that, like what you just told me, like everything. Like it's good information. And also, when I know you said that you're gonna open your tab again, your analysis tab. I think you said that.
Yes.
Are you gonna concentrate on shares in there too?
So I'm debating on how I want to do it. I mean, so I was gonna open a tab with a guy named FaZe.
Oh,
Um,
phase.
yeah, he does a lot of option selling, so I think it'd be beneficial for me and him to do option selling there. And I
Okay.
might post in the long-term channel. I might talk to Tilio and see if I can change it to swing trades and long-term trades, um, because that's where a lot of the shares go. So I haven't quite figured out just yet what I want to do, but shares are going to be my main thing because most of my money's in my retirement account, and I'm not interested in doing options with that. Now I've got about
Yeah.
8,000, 9,000 in my margin that I could do credit spreads with, and something like that. But I'm not really interested in doing options in my Roth. So,
Yeah. Of course.
and that's majority of where my trading is going to happen.
All right then. All right. Thank you, Hosta. I appreciate your advice. Like it's very like beneficial. I know it's late too, so I'm sorry about that. Like,
No
and I
worries.
had and you did math like this late, but yeah, thank you. I know it's gonna benefit me, and I'm really gonna take this into consideration.
You should do the math on 10 years of what 5% will give you every month for 10 years. So you do 6,000 a year.
Yeah.
Yeah. So like I just did, 6,000 and then do 5% every month. And then the next year you add 6,000 in January and then you give 5% every month and keep doing that for 10 years. You'll be mind blown how much money it is.
All right. Yeah, I think I'll do it. Maybe not right now. Maybe tomorrow. But yeah, I'll definitely like see how it is.
I might
All right.
just do it one of these days here in the near future just to throw it up on my channel so people can see how
Yeah.
much money it really is. But Well, I think on that note, I'm gonna go. It's 2 o'clock. So
Yeah. Thank you, Hostile, for
welcome, and check out those videos I told you about. Those will help you.
Yeah, I would. The standard deviation and the support and resistance ones, right?
Yep. And there's a excuse me. There's a standard deviation channel scanner,
Oh
and
yeah,
then
that one too.
look for the trend 50% retracement in Fibonacci.
Okay. All right. Thank you, Hostile.
You're welcome. All right. If anybody else has any questions, feel free to at me. I'm gonna go. So thanks everybody for joining, and see you on Sunday.